Step up, traders, time to roll. Numbers shaking down the scroll. Clock is ticking, you already know. Welcome into the stock market show. Oh, yeah. Monday to Friday when the floor's alive. Captain Jim James help you cut that dry. Charts are jumping, green and red glow. He's steering this ship on the stock market show. It's a stock market show where the bulls run wild. The bears lay low from the first loud bell till the closing blow. Ride that wave on the stock market show.
Earlier says they've structured stellar infrastructure in Lebanon areas.
Got your watch list ready, got your game face on. When the spreads get heavy, he keeps you calm. From the open road till the last trade goes, he's calling the shots on the stock market show. Hey, it's the stock market show where the bulls run wild. The bears lay
Check 1, 2.
first loud bell till the closing blow. Ride that
Ooh, my voice already sounds better. Now, just not to fuck it up.
log on, lock in, get that trigger pulled on. TraderTheTrigger.com, TraderTheTrigger.com, TraderTheTrigger.com.
Check 1, 2, 3. Yes. I am, Princess. I think a lot of traders held on last night. After the bell here, they didn't close. They're being rewarded, I think, or somewhat, and they'll be rewarded. We also have our second back test of the hourly trigger going on right now, which is usually, like, percentage-wise, extremely bullish. So off this bell right here, should be good. It's very rare that we wouldn't have some kind of continuation to in a second wave. No, 1, 2, third wave. Whether we get the fourth and fifth, I don't know, but this is the third wave right here that's starting right now. Let's go look at it really quick. Okay. I guess the top is not in, huh? Against what everyone said. No, we have some stuff to look at here. I'm going to post something today for the entire community inside of the market chat. I've been asked a few times about this, and we will discuss what I've been asked. I've been asked a lot about this, and it's on this subject with this subject right here with the street calling for a crash. So I think I've addressed it at this point, but what we'll do is I will address it for you in a way for you to profit, if that helps. Let's go over here. Go over here and look at that right there, parked right up there. I don't think we need to put this one in. I think if we come down here, if we come back down here, we're going to sweep this whole thing. So just that one daily matters. I guess we could put the other day in if you want to know where the bounce is going to be, but I think we drill right through that if we break down there. Let's go over here. Look at this. This is what we need to hold right here on the day right here. This is what we're working with right here. There is a little bit of some negativity up here on a daily basis, trying to keep us pinned in. It'd be nice to see us wrap this up today, tomorrow, and then grind sideways on Friday. If you're looking for a day off, you could probably take Friday off. We'll discuss this part too. There's like a couple theses here for Friday. So Friday you could potentially, so we're going to Opex on Friday. You could potentially take Friday off and come back for the end of the day to make a trade. There's potential that if it's not as big as during Opex, but if your stock has had like a really good month, or a really bad month, the day of the Opex, they could get hammered or lifted up. Let's look at this here. There's another one up here too, right? Let me just check this really quick. No, this is a 4 hour. This right here. Let's look at a 1 hour.
10 seconds.
This all looks good here. Like this structure here is outstanding.
Market on open imbalance.
Let's just look at this really quick as a whole.
15 million. Nasdaq 100.
So what's good about this here is this is clear distribution here.
Buy side 93.
You got it right here, right here, right here, and you're really just looking for this last one up here. Whether this is Thursday or Friday, and here you're just looking for this last one, and then we should break this plane over here. It should be something like this, and so this makes any sense right here. This should not fail. Sometimes they do. Like you have to be careful. On these back tests, you have to be careful. Like you're setting up basically support. You have to be careful every time you come back down in here, just making sure that you're not making new lows, stuff like this, or that you're failing to make a new high.
US listed shares of Alibaba.
So if you're coming up here and you failed,
the company misses quarterly revenue.
instead of this up move, you get the down move here. I'd be fearful that the structure was broken. You know, you're like down there, then you're down there, and then you're out of here. So all this looks pretty good so far. You're just kind of waiting for this last little leg up here. 742, 750, anywhere up in here. And then a final roll. Something else too here is that in this particular last leg right here, there are two back tests of the hourly trigger going on here. You have, I think I spoke about this yesterday. You get the first one right here. You get the second one right here. On this back test, if it shows us, a bottom and a new high to beat the prior high, like we teach you here, right? This should turn into like a 85 to 90% chance of printing. A fairly large print up here in very good safety in terms of probability. And it's all due to these two back tests right here. And you also have the break of this new high up here has been taken out. This is outstanding. So you've got your bottom, you've got your new high above the prior high. You're coming back in right now to back test all this stuff. And if this holds, this would be 1, 1, right? So you got 1, 2, and then your 3. And that we don't care about 4, 5. 4, 5 is for FOMO, right? 4 and 5 legs. Sometimes you can get it, leave runners on, that kind of stuff. But this middle leg right here is the money leg. This is the big money leg right here. So we want to pay attention to whatever this back test is. And if this back test is good and we follow our rules, we should be fine for a beautiful trade higher. So in the last part of that, this last part of you get your first high, you get your back test. And once this thing starts turning around, we want to slam the buy button and launch this bad boy up to the moon. Now we're not ready yet. You don't just go in here right now and just slam the buy button. You want to be watching for the turnaround. So what we'll do is we'll watch this closely together here this morning. Happy Wednesday to you out there. Hope you did well on that open. You must be pretty happy. I think the opening was pretty good up here. So let's take a look at the 10 o'clock. And matter of fact, we'll just leave this like this. And what we'll do is we'll say Friday at 1600. It could come before then. But what we'll do is we'll snap it just kind of like this. Right up in there. You might not get the creepy crawly up the wally until, let me just redraw this. You might not get the creepy crawly up. Sometimes they do it early and then they sell it. Like theoretically, we could do it a couple ways. We could do it like this, where we crank early into, let's say, Thursday, and we're like ripping up, hitting the target here, but early. Then we fade down into it. We could park here. Believe it or not, for like Wednesday, Thursday, murder all these options and then go vertical straight up. There's potential of that too. There's a third outcome, which would be we just grind all day long and then we dump. There's potential of that. Or, grind all day long, squeeze it up over the weekend, back straight down onto Monday, and then out of here. Now, there's a few different outcomes here. OPEXs are kind of weird. A lot of what you're mostly looking for here in OPEX, because VIX-piration is late, is do we have an unwind, an unclench, no matter where we are in price? Does OPEX offer an unwind? Does VIX-piration next week offer an unwind? And there's a larger reason for this. These unwind opportunities, we're going to talk about them right now. Let's look at, hold on. I think it's on the 19th, but I could be wrong. I just want to make sure. Like, forget about like NVIDIA on the 20th. Or you can think about it, but I don't think NVIDIA runs until after we get through all the stuff I'm talking to you about. I think it's going to be a delayed print. I know it was going up last night and stuff, but the big print, like the print that I'm talking about. So VIX-piration calendar is on the 19th. This could be a source as well of disappointment. So you've got NVIDIA earnings right here. And, you think everything is honky-dory with NVIDIA. And, you know, we're blasting up here. And then you're getting the unclench from Opex, right? Wham, wham, wham. And then you drive straight into Vixpiration. It's like blood. That would hurt for NVIDIA, right? So you get hurt into NVIDIA, then you get trapped up in NVIDIA's ER, even if you get a good report, and then you're back down again. And you get my point here? Like they get you in here, and then the real NVIDIA move is later. Now, you really want to pay attention to these things, and there's a bigger reason for this. We just had the inflation print. This is supposed to be like the first ability to have an unwind, right? Try to break free. You can see the market attempted to unwind on the inflation print, right? We had unrealized volatility that got priced in, but not realized volatility. And there's a reason for this that I'm bringing this up, because you've got guys out there calling for a major market crash or correction of some kind. And I need you to know something. And I think I've mentioned this frequently, which is this is trend right here. So this is trend right here. This is the market trending up into June, right? And this is major market trend right here. This is major market trend coming up into June. And you always want to think about trend when you come into a Vixpiration unclench or like a window, right? You hear Spot Gamma say things like, what is Spot? I forget what Spot Gamma calls it, but they say that you're in the window of weakness. And a lot of bears take it as
stay high into 20.
oh, we're going to crash, or
technical recession.
Oh, the market's going to go down. And the window of weakness is for the market to move. It's not necessarily down. It could be up into this window of weakness in here. There's a window of weakness on Opex, Vixpiration, and month end. And just looking right here, this is not a good start. I'll tell you right now. Like, if you're a seller and you're looking for the window of weakness to send us lower, you kind of want like this unrealized volatility. We already know that's going to be there, right? If that's there, whether we get a good or bad print. You want like the unrealized volatility to print like slam. Does that make sense? And then you're trying to recover on this bad news while you're changing sentiment. And then you come into Opex and you're sucked in here. And then the unclench goes bam. Does that make sense? And then you're coming back and you're recovering in here. And all of a sudden Vixpiration's like bam. And why am I saying that? Like in time, why am I saying you need to get down here? And it's because when you come into a new month, just like when we're trying to recover from a major correction, you want price to be like down here. And you want this new month flows to be reflective of bearishness. And you also need, like sentiment to be in the shitter. You need the daily trigger running over the top. You understand where I'm coming from here? Like, so when you come into a new quarter, or a new month, and you're now going to sell a bunch of calls, buy a bunch of calls, sell a bunch of puts, buy a bunch of puts. You're going to decide what your plan is for the new month. And we're coming into the end of the next quarter in June, where you cannot do as much as you once wanted to do. Like when we come in through a new quarter, the market's really free to move. And if you can't get this down into the last month of the last quarter, if you cannot do that, right, it's hard. You'd be hard pressed for the market to go, yeah, we're buying a bunch of puts, bro. if you're over here. If you're still in trend, you can't break trend. We'll stay in trend into the end of the quarter. So this is not a good start over here. And you can see this as it takes place, up or down, whether we're correcting a massive, big, major trend correction or not, or we're in trend up. You can literally track on Opex and month end and quarterly Opex and quarter end, and you can see where we start to break trend. We're like looking up or we're looking down, and how much it is predictive on a major trend change. We don't have that right now, do we? This is not productive. I'm just going to tell you right now, this is not productive. You need to be like down into a new month. So we can get there still. The Bears song is not over. They have this right here. I mean, they basically have like two more chances. They need to get the market down post OpEx. I don't like the idea of waiting for a expiration either. Oftentimes, if you don't get like an unclench here, then an unclench here, what happens is this will recover. You need it down here so it doesn't recover. If you're dicking around up here and you're down for one VIXie, it recovers in like a day, like it never happened. And all of a sudden, your VIX is high now, right? Now you've got your VIXpiration ripping faces off. You're coming down into the new month. People are buying the new month, and you know they're partying here into the 12th again, right? Does that make sense? So like your VIX is high, everybody's excited, you're still in trend, they're all buying fucking calls. So time is ticking if you're a bear, is the point that I want to make to you here. You only got so much book to write, and you only got so much time to do what you want to do on sell side. Let's start taking a look here. Now that we're open, have a little peek in here. Let's take a look at this. Utter rage from bears. It's right here. We almost at 10 o'clock yet? There we go. Let's try to kill some time here.
The Nasdaq 100 turns negative.
Just what you need is him talking right now. He's like the bear in the corner, isn't he? It's like the S&P turns negative. I mean, you should buy tons of call puts. I mean, I'm just kidding. He's like, buy my put bags. That right here, and we're gonna go just like this. Getting tighter. I gotta go back to an hour. Not that.
So according to Iran's Labour Minister, cited by Iran International, we must reduce the sale of crude oil in the country to zero. So again, according to Iran's Labour Minister, cited by Iran International, we must reduce the sale of crude oil in the country to zero.
We say where's Friday?
According to a poll, the Bank of England to hold bank rate at 3.75% this year, said 27 of 56 economists, 7 saw at least
100.
one cut and 22 saw at least one increase. Furthermore, inflation to average 3.2% and economic growth 0.8% in 2026 versus 3.2% and 0.7% in the April poll. The S&P 500 extends decline to session low of 0.2%.
14, where's 1600? Right there. We go a little bit deeper in here. We might stretch down to this one right here. Yeah. It was such a big move overnight here. $7.36 for Friday. I don't want to get caught in like dying in the money or die. Like I was gonna get 740s again, but I'm afraid of come on, Phil fucker. There's one more spot down here we can check, but I think that was the bottom tick. Check right now. There might be one more down here, but it could dick around down here a little bit.
Voice news disconnected.
Reporter on X saying that Trump and China's Xi are to weigh tariff cuts on 30 billion of imports per RTRS reporter on X.
The Nasdaq 100 turns positive.
That's right. Say it, you dirty old man. That fucking VIX is still there, just like ready to pump. It could be VIX up, spot up too. It's hilarious to watch the VIX 9-day right now. VIX is like primed for another spot up, gap up into Opex. Come on. I want to check something here, guys. Hold on. That's a good candle right there on an hourly basis. We want to raise this one up right here in the 4 hour. 734.28. Yeah, we're fucking pretty goddamn close. Let's check the daily candle really quick. It's somewhere under there. Support is slightly lower than we are. It's like support is like right here, like right in here. Now we could come back down here, but I mean that's up pretty fucking close to where real support is. There's some potential of like roll down nonsense and then up. That would be scraping the fucking bottom of the barrel. So, we'll mark this as bottom. It's really fucking close. But if it's not, if you're more conservative, there could be another, could be one more down move. Let me give you an exact number here. So 734.31. If you wanted like max pain for support, I'll make it white and then I'll make it dotted. So if you wanted like max pain, it's probably somewhere in here. If you're a little bit more conservative for a Friday call, I'm already long. I literally bought this like right here. Okay, I'm going to go inside the Discord here. Into the main chat, market chat. Hang tight here. So goddamn good.
According to the Wall Street Journal, Anthropic received investment offers at over $900 billion in value. Bank of England's man says recent geopolitical events have reinforced how exposed the UK economy is to international shocks that might require a policy response. Bank of England's man says implications of new sources of finance for the UK current account deficit are not simple. Furthermore, man says tighter policy stance could trigger volatility as new actors unwind positions, potentially leading to tighter domestic financial conditions than intended. So just saying again, but Bank of England's man says tighter policy stance could trigger volatility as new actors unwind positions and potentially leading to tighter domestic financial conditions than intended. Man says monetary policy cannot offset cost push shocks from energy prices.
Hang tight here.
Man says changes in investor base for gilts will likely affect cost of borrowing. And man says trade-off between inflation and activity increasingly stark.
What is the band saying? I'm like wondering about gilts in terms of
Policy could tighten
the U.S. saying they're going to print their way out of debt. Our new guy here, Warsh. Oh boy. We're going to chat about that this morning. We're going to talk some econ data here in a few minutes. U.S. PPI year over year actual was 6%. Forecast was 4.8.
We have posted the text release of Bank of England's man speech on the feed for those interested.
I just Pesky. I just made a post in the Discord, on the market chat, and I think that if you want to look at that trade, even if it doesn't produce itself, I think just starting looking at it now is appropriate. Like I think what you're saying is perfect. Yeah, I got no problems with what you're saying. And beyond that, I think even just looking for that trade that I posted at this point, like, I think for a lot of traders, like, we have to talk about a bunch of shit. Like, we have to talk about some econ data so that you guys are aware of where we really are. I want you to realize where we need to get for that trade that I posted to print, which I described earlier. Like, you have to break trend. There's only so much time to do it. And, even if you catch that trade, you have to be aware and manage that trade, like, in the time allotted. Like, we need to get underneath a bunch of shit for that trade to continue to produce into, like, June. I mean, I'm open to it, but I think caution is fine here. And I also think that waiting for that trade, whether it shows itself today or tomorrow or Friday or Monday, if it even presents, where we need to be for that to present. We need to take every fucking put. Like, you need to, like, we need to clean out the option chain for the month. and catch the unwind. The unwind likely can't take place until specific time periods. So maybe Z and Trump can trigger it, but maybe they like give a bunch of good news, we spike up, and then we trigger it, and we're not like caught up in the euphoria of the moment. We're looking at that reaction trade. But I think caution is fine here. I'm fine with it. I would have preferred to have swept this low right here. But I started seeing the spike here, and I'm like, yeah, let's just try it out and see if it happens. We'll put a stop here, and if we get stopped out, we'll buy the one lower. It's fairly easy. A fairly good tick right there. We should grind up and to the right into we're either going to grind. I mean, the one thing that sucks here is when you come into Opex, you don't know exactly how it's going to go down. You can say we should do a few different things, but once you're sucked in the tractor beam, it can suck really bad, and then all bets are kind of off when it comes into Friday. Like, everyone tries to use their regular things when you come into Opex, and they don't work. Too many people in the market trying to do too much different shit. You know, they're trying to close options, trying to open options. No longer do we have to delta hedge a bunch of crap, and dealers can buy or sell depending upon what they need to do, and they no longer have to hedge. So there's a lot of cross currents, so you can like get caught in it. We can look for some stocks that are downbeaten on the month. They could potentially unwind to the upside. So let's say just a few things in this Opex. If your shit has not printed, let's say you've got some calls, and let's say your favorite stock went into let's say this is your favorite stock, and this is its ER, and you ramped up a little bit, but you were supposed to go up here, and then they shanked you, right? That's a dealer doing that, even if you don't know. And I'm going to print your shit up here. It's no renewed call buying on the open of the next morning, but your shit at Opex month end can print big. There's a lot of moving parts is the greater point here into Opex. So some stonks get hammered down in Opex too, right? And they get hammered for the month, and they get hammered into Opex, and they get hammered into month end, or they pin that hammer, and then they don't unclench until the next month. So there's a lot of busy going on during Opex season. The other issue here too is that we've got Vixpiration after Opex, not before. So even if we pick that top, or whatever it is, it could still take till like Vixpiration unclench. Like, it could like take the weekend, take Monday, take Tuesday. You like need to shake it loose. So I think cautionary is fine, especially as we come into Opex. They're easier setups. This is a hard setup, right? Like, this is operation kill options, right? Any of your fat options are going to kill any like calls and your puts and all that kind of stuff. They want them all to go to die. And then they don't want to print for you the shit that you wanted printed until your shit's either near dead or dead. Does that make any sense to you out there? If everybody's on the same side of the boat, they're going to not pay you. Too many fuckers on the same boat. We ran into that last fall. Everybody knew we were going up to 7,000. So everybody started like loading 7,000s. And then I was watching the chain as we came into like October, November and shit. And it was like people were rolling into like 700, 720, 730. Saw 730 gamma bars in like September, October. And the only reason we didn't print those not like above 7,000 into the end of the year was because we hit seven. I think we had like 6,998 or something, but we didn't print it. And the reason we didn't print it was because everybody was on the same fucking side of the boat, right? And then of course we swing back up, and this springtime we nail it. We take it all out. Like, this whole price action to me, being up here, is all related to last fall. It's all last fall. As soon as like the whole market didn't think we were going there, and all that shit died, we were free to go up there and hammer out all these higher prices. Oh, yeah. Burr more, baby. $3. Oh my god. 7.39 call for Friday is now $3. Yes. I'm gonna go up there and slap him around a little bit. How's in there? Perfect strike right there. That's a beautiful fucking thing right there, isn't it? Back up there, hit this one right here. Who wants calls now? Start buying calls. What's going on, Marmot? The mouse, how are you doing? What's up, boys? What's going on, the mouse? Good to see you, brother. Did you buy that bottom with me down here? Hopefully you did. You're making fucking fat bank right now. Fuck yeah, right? I'm happy.
Says if a new shock were to occur and weigh on investor confidence, international investors could respond by reducing their gilt holdings. And man says,
I think we can come back for this one potentially.
Risk premium on gilts.
We missed like the NQ load over here and the ES low down here. We had some traders that were hoping that we would hit this one. I did too. I was wishing we'd go down here. There's potential for us to like come into like 12 and maybe dip our wick down there. But if we do, you buy the wick. That could be bottom though. This is fairly fucking close. I mean, the low on this was 735.42. We're looking for 31. It's fucking close as fuck. We're mixing fucking pennies here, aren't we? Yeah, get sucked back up there again, dorks. Now let's see if we can. The next target is going to be 738.46. 738.46, right up in here. Right there. Good job, Freddie. You can add. Freddie, you're probably gonna be able to add again, brother. You're probably gonna get another chance in here. We'll probably do an equal leg down here, or do some kind of a new low or something. It's potential for it. You might be able to jump on board the party bus, bro. We'll leave this out here all day long and see if we come back to it. That was a gorgeous fucking dip by. That was fucking gorgeous. Fucking out in left field, fucking glove out. Well, damn. Bring it on in, baby. What is that right there? Hold on, I'm giddy right now because I'm making so much money here. Hold on. What is that so far? Yeah, that's 30. That's 30 points right there, right? That's good. Woo. It was pretty good. Okay, we got to chat. We got to go over some stuff here. Now, we got to talk about Warsh. We got Warsh coming on board. Today is the 13th. So, barring like anything in the Senate, Warsh has made it known that he wants to pay down debt with inflation, basically. So you put the money printer on, you make money worthless. Let me explain this simply for you if you don't understand what I'm saying. Part of this show when we started it, I spent so much time learning the ins and outs of the market, and I got so fucking smart that I started losing money. And because this had to happen. That's true. I believed a little bit too much in the knowledge that I had. And so what I really wanted to do was dumb down my trading. And what that did was it broke me out of a rabbit hole of information. And I was able to learn more and retain what I think is the most important information or the most top line information. What it did was it allowed my mind to see more. So I wasn't like fully focused on just gamma or fully focused on Elliott wave or whatever it may be. And I take away the key points, and I know that all this stuff kind of fails. And I'm trying to think of it like
we have the weekly EIA crude oil inventories. Forecast a draw of 2.45 million. Prior a draw 2.313 million, with a range of a build of 1 million into a draw of
voice news disconnected.
Think of the market as you've got a window, almost like your computer screen. You got a window, right? And you lay another window over it. And you lay another window over it, and you lay another window over it, and another window, and another window. And if you can see through all of these windows still, you can kind of see where everybody is. You can kind of see on each window where the LA Wave people are. You can see where the Gamma Bros are. You can see where the, FOMO people are, where the Fear people are. You can see where all of these... where traditional chartists are. You can see where Momo is, where velocity, where triggers are, the hidden hands of the market. And so you're not just looking at one thing and you're the master guru of it. So instead of being down this one rabbit hole, you're taking away the best parts of all these different things, and then you're looking at them through the market. If you can master that over the years, and if you can dumb your trading down and your information down, first you have to understand it. Then even if you forget it later, you take away the key points. You can always go back and relearn it again or refreshen up on it. I do all the time. All the time. I'm like, I forgot this concept, or I forgot what this archaic option thing is. Just like whatever it may be. I got three-legged fucking broken leg, broken foot, missing sister put butterfly bumblebee or something, right? I'm like, all right, I'll go in there and read it again. But it is so rare to simplify complex topics. It's not an easy thing to do. If you have the ability to either do that yourself or take that from somebody else, where someone can explain something simply for you, even if you don't fully understand it, or maybe you read all about it and you don't understand it, if you can just think about the top line of this stuff, it's usually all that you need. Now, you also have to make sure you have the correct data. You have to also make sure you're not, in this day and age, you have to make sure you're not consuming the wrong shit. In our day and age right now, information is a huge commodity. Huge. And it's wielded very nefariously. And on top of all that, education standards are going down. Kids are learning AI, not how to write an essay, not how to make an argument, not how to win an argument. They're going to AI to do it for them. which is even more perverse because you don't have the ability of your own self to identify what's fake and what's real. And then our consumption habits are changing. Like, I've got 15 seconds. Read it. Give it to me in 140 characters or less. I mean, that's great. But if the person that's giving it to you is being nefarious, it can really go sideways, right? So you kind of like understand this stuff or research it. And even if you don't understand it, then have somebody explain it to you simply. And you have to be able to trust that information enough to get by. You okay now? Is that good? Can I get a fucking burr inside of the beep, 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 beep. Can I get a burr in the chat, please? Can I get a burr? Yeah, that's right. That's what I want to see. Give it to me. Give me a fucking burr. How's that fucking green balls for you now? You like green apples? Next target. Hold on. Next target, 739.04 and then 739.66. But we're going to pull back here for a minute. We're going to calm it down here. $3.39 in those calls right now. Okay. So it is not easy to communicate complex things simply. And so I want to simplify some stuff for you today. You don't need to know everything. I'm going to walk you through some of this stuff so that when you consume something that is fucking a bold-faced lie, you can say, Captain Jim James told me something different than that. And I'm going to read a comment to you right now about this because I read the same story too about consumer debt. I read a really bad story about it. It was headline. And then I saw someone make a comment about it somewhere, and another guy ripped him to fucking pieces. And I'm going to read it to you because the reason for this is because like Warsh wants to use debt to print us out of our deficit and to print us out of our debt. And I think simplified, people can't quite grasp that. So let me explain it to you. If dollars are worth less, right? If I can make dollars worth less, you are going to what? Get more dollars. Does that make sense? So if I'm trying to pay off my debt, and hold on here. Have a bunch of pens over there, please. Whatever you got. Perfecto. Let's say right now, I take a loan through you, and I want to buy your car. And you're gonna give me the loan too. Okay? So you got a car, you want to sell it to me. And your car you think is worth $1,000. $1,000. No, hold on. Let's see what I got on me real quick. 5, 6, 7, 8, 9, 10. Perfect. I got 10 pencils here, okay? Now, I don't have the 10 pencils. I just have 10 pencils here, okay? Really simple. I got 10 pencils, okay? They're over here. Pencils are dollar bills, okay? That's how we pay for shit around here with pencils. They're a really rare commodity around here. Nobody has pencils. You know, it's rare. You know, it's like diamonds or gold or dollar bills or won or yen or whatever. Pound, clamshells. We got pencils. Okay. So you own a car. And for the value of one pencil, you come up with a price for your car, right? You say, okay, Jim James, I've got a used car. I want to sell it. And I'm going to charge you 5 pencils. Five pencils, right? Cost 5 pencils. So I say I go, yeah, you know what? I'll do that. I'll buy that car for 5 pencils. So I don't know, right here. Can I put them right here? So I'll buy this car for 5 pencils. So you sell me the car. And within the note, it says, it's stipulated in the note that I don't have to start paying you for that car for 6 months. I get a sweet deal on this. I get to buy the car. I don't have to pay for it for 6 months. It could be a month. I don't really care. It's a month. So you're like, okay, it's 5 pencils, and you have to start paying this off in 1 month. So I say, sure, okay, that sounds great. And I appreciate you letting me wait a month. So I owe you 5 pencils, right? I got my car. I don't care if I have it on my person, if I'm driving it, if it's parked. I don't give a fuck where it is. And let's say I also happen to control the money flow in our country. I happen to do that. So what I do, right, is I begin to devalue the dollar or the pencil. I devalue it. Now, the 5 pencils that it took to buy that car would now cost 8 pencils in 1 month's time. That guy was going to sell me that car again. He would ask for 8 pencils. What is that? That's inflation, isn't it? Right? If I'm making less money and I don't get higher wages and I only have 5 pencils, I'm fucked out of the other 3, right? Now, if I get to set monetary policy and I devalue the dollar over the course of a month to where that car is now worth 8 pencils and I happen to make more money, right? Or I had more money before, right? Or have this new money, right? I'm now getting a discount, aren't I? Like I owe 5 pencils when now it would cost 8 pencils. So the first thing I'm getting is a discount, aren't I? Once I begin paying this off, right? Does that make sense? I'm making more pencils in the background. I'm making a bunch of pencils. Does that make any sense? So if I'm also setting monetary policy and I'm also the one printing money, and it's cheaper for me to print money, and then I have old debt with you, and now I have to pay less dollars, don't I? You don't get to come back in and say, oh, you now owe me 8 pencils for that car. Sorry, buddy, it's 5. And I'm the money printer, so all of a sudden my debt to you is what? It's cheaper, isn't it? And then once I pay that debt down, let's say I pay you 5 pencils, I pay another guy 5 pencils, I pay another guy 10 pencils, it's now worth 20 pencils. I pay all this debt down with all this cash that I created. And then what do I do once my debt is paid down? What do? I jack up the fucking, I suck all the money out. I suck the pencils up back out of the system. And now pencils are worth more. Right? I raise the value of a pencil. And then I start creating a whole bunch new debt. I'm going to take that, take this, take that, take this. And then I'm going to devalue the dollar again and pay that all down. So I'm getting a fucking discount, aren't I? That's kind of where we are with our debt. It's kind of what Warsh is attempting to do on thesis. That's about it. Does everybody understand that concept? Where else do we apply that concept? Anybody explain another way we do that? We do that with currencies in different countries, don't we? So we have the rise and fall of the value of currencies, and I can use currencies to take cheap debt, short-term debt, somewhere else, wrap it into a trade and trade it somewhere else, right? And then when that currency goes up in value, I can make a bunch of bank, right? So let's say I'm trading stocks. And I come to your country, and for one of my dollars, I get to buy I go to your country, and for my dollar, I get to buy 10 of your dollars for one of mine. I give you one, you give me 10, right? And your currency is really cheap, isn't it? I get 10 of yours for one of mine. And I happen to know that in a month, your currency is going to go back up in value. So all of a sudden, it's like 5 pencils for every $1 instead of 10. 5 for 1. But I still have 5 of these pencils here. So when I take the other 5 pencils that I have in the other currency and I go back to my money, where I come from, what do I get back? I get back 2 pencils. I came in with 1, I now have 2. And all of a sudden, my currency gets more valuable. So I'm wrapping trades up and using currencies, and I also roll those into trades. You can actually start maxing. I could literally lose a little bit of money in the trading and make the money in the currencies. So then I come back to the U.S. and I go, oh, my God, I got 2 pencils now. And, oh, yeah, the dollar is going up in value. I just made a bunch of money in this other country, and I was trading in their country where it was really cheap. And I came back, made a bunch of money in the currency conversion, came back into the United States, and now I even got 2 more pencils. Does that make sense? Just made a bunch of money, didn't I? And this is used, like a concept like this is used across the world. Trades are cat-shipped. And you hear about like the tech unwind trade with the yen carry trade. That's what I'm describing to you right now, right? The yen carry trade. And the same thing applies to our debt, or at least the attempt in what they're trying to do with our debt. And why am I bringing this up? Why am I telling you that you're devaluing the fucking dollar to pay debt? Debt that was made when the dollar was worth more. Because I'm paying the debt cheaper, right? Now, if I'm telling you that right now, and you got Warsh coming in right now, and Warsh wants to pay this fucking debt with cheap dollars, you don't get cheap dollars by what? Hiking, do you? You don't, do you? So our debt's out of control. Our deficit's out of control. We're spending tons of money. Warsh is a hawk. Warsh is not a hawk. If you go back and look at Warsh, he's a QE guy. He fucking signed off on QE. He didn't sign off on QE2. And he's Trump's guy, isn't he? And what does Trump always say? Cut rates. Right? Well, where are we at right now with rates? We're in negative rates right now. We're in negative real rates right now. With yesterday's CPI print, we're in negative rates, aren't we? So the neutral rate at 3.50, 3.75 is actually negative when you consider inflation. What does that mean? It means that short-term debt is cheap. Short-term debt is cheap, doesn't it? It's also inflationary, isn't it? It's productive for expansion of economy, isn't it? And we were in QT, weren't we? And do you remember when Jerome in December ended QT operations? They're in QE now. They're pumping billions every month. They're printing. Print. That's going on right now. So if you think that, well, is that bad? We can handle a little bit of inflation, can't we? It's called running it hot, right? You run the economy hot with hot inflation. Economy expands. There's more money sloshing around out there. What else does negative rates do? Encourages inflation, encourages spending, encourages expansion, doesn't it? So you've got Super Hawk Warsh being pushed around as he's Super Hawk, but you know, if he comes out and he lets it run hot for, say, the summer, and he decides, well, I'll throw a rate hike on, but I'll wait for seasonal weakness. So you come into like mid-July, market's already starting to roll. And then you get like hawkish Fed chair, comes in, slams you down in the fall at some point, late summer, early fall. We're already going to roll down anyways. Market fucking jackknifes, but we're already up because of expansion, right? Market's going fucking burr up. Market's going burr up in a June, burr up in a July, starts going sideways. You come into some seasonal weakness, you're already going to drop. You get a 25, 50 basis point hike, bam, we're down here. But you missed the whole trade up in June and July. Not that bad for the economy or market, is it? All of a sudden, the bond market's happy now because you're taking inflation seriously, so we continue higher into the end of the year. And all along, you might be saying to yourself, well, the economy can't handle the higher inflation. I mean, what do wages need to do? Just keep up, right? We just have to be concerned about wage growth and spiral, right? If wages stay stagnant or slightly go up with inflation, not so bad. And what about the state of the consumer in all of this? We can't handle the price of gas, bro. Can't handle the price of food. Can't handle the price of insurance and my electric bill and this and that. Well, we should check and see if you can or can't. So we'll look at the state of the consumer today. See, you have to see everything for what it is. So is the bottom 15% of America fucked? Yes. If you're the bottom 15% of America and you think things are bad now, they're going to get a fuck ton worse for you. That means if you're in the bottom 15% of this country, I'm going to warn you right now. You need to start looking for new work that pays more. You need to demand more money. And if you can't get it from your job, you better start looking for a new one. Something that's paying you more. And you may even want to start negotiating rent. Now, I know rents have been out of fucking control. They have totally detached from home sales. But even if this means you move somewhere where rent has come down, because that is a micro or real estate markets are micro markets, even if you have to move, you may want to. That is advice. So say you move to Austin. Housing is cheap there. Now, the work there has kind of sucked. But you can still get paid pretty well in Austin. And you can work from home if you want to. But you might even need to do that if you're bottom 15%, because what's coming right now is going to fucking roll you over. If you're in the bottom 15%, you think things are bad now for you, they're going to get way worse. Way worse. And we'll go into some of those numbers today. Now, the other 85% of you are doing way fucking better than you admit. And the consumer data on you says that you can handle this inflation, even though it's a fucking nightmare. Now, there are some caveats in this that you want to be aware of right now for your own personal life, too, because there's a bunch of shit you got to look at. We got to look at like gas and oil versus electricity, and how those charts usually run, the cost of things. But we need to look at two important things here. We need to look at CPI and inflation. We need to see where it's coming from. We need to differentiate between tariff inflation and SOH inflation and natural inflation. We also need to look at the consumer, and we need to also consider the bond market. You got to remember, we've got a new Fed chair, and the bond market is all ears right now. And they're either going to tell Warsh, you can do this, or we're not down with this. So there is risk here from the bond boys. They could have a fucking meltdown and say, we're not doing this. But if they let it fly and say, okay, let's see if this guy's got the right idea or not, I would be hard-pressed to think you're going to get a rate hike from Jerome soon. If they let it run hot, they start paying down debt, and you're stuck chasing. And we got to talk about that, because if that happens and the bond market doesn't freak the fuck out, it is a mad rush to outrun inflation. There's an elephant of money, and they will do anything to make as much money as they possibly can when economic conditions are great. And then what they do in this late economic business cycle, or mini or big cycles, is when inflation rears its ugly head, the natural kind, the cyclical kind, that money fucking like runs to outpace inflation. Instead of these good times making all these profits, make banner year, now I got to outrun inflation. And then once we get through that inflation period, the market does tighten eventually. And that same elephant money will shift into protect mode. And this is what it all comes back to. If you're going to be a market participant and you're afraid when times are good, hey, we're starting a bull run. We just came out of a tightening cycle and a big crash and a big bear market. And you're the guy that's going, I'm afraid. You're out of your fucking skull. You need to put risk on when we're in the start of a new economy, a new economic cycle, a new business cycle, a new expansion of our economy. You need to put risk on because you have to make as much money as you possibly can, because when you leave that cycle into the inflation cycle, you're now shifting to chase. And then when you move into the real bear market or real tightening cycle or real end of an economic or business cycle, you have to be able to shift to protect mode, and there's not a lot of room for error. You had to have made a bunch of money in the economic expansion cycle, and you'd outrun inflation, and now you're in a place where tightening is everywhere, and the returns are lower, and you've got the market hunting you for money. There's less premium built into options. Your state and local and federal governments pull their claws out to take money from you during QT, right? Government tries to suck the money out of the system. All these corporations want your money too, right? It's like musical chairs. Who's got the last of the money? How do I outrun all of this? And then within all of this cyclical stuff, when we get to the end of, we start with a bull market, we go into inflation, then we go into QT. And when we get to the end of all that, capitalism says that if you fucked up, or you partied too much, or you had committed fraud, or you didn't invest properly, you did bad deals, or you didn't put risk on when you were supposed to, and then you didn't chase inflation, and then you didn't protect during QT, they flush you out of the system. That's the natural part of capitalism. So here's free money. Invest it how you want. And then when we come back to get the money, you better have made some for yourself, because if you didn't, I'm going to suck those dollars out of the system that I initially waved in your face. Now you can learn about this easily. This thing that I'm describing to you. I forget the guy's name. It's an old school Wall Streeter, but hold on here. Ray Dalio does a video. Now, and most of our people know about this video, but if you, let's say you're not the guy, let's say you're like, hey, Cap, I just eat crayons all day long. I've never heard you discuss this. There's a link for you. Watch that video. Now, Ray Dalio couldn't hit the side of a fucking barn when it comes to trading. Don't ever trust that fucking guy. Ever. Don't ever trust Ray Dalio when it comes to trading. But Ray Dalio is a great explainer of economic concepts. Economics 101. Literally. In this video, I'm going to post for you in YouTube and in Twitch. You want to watch that video, because that video is going to explain. You're going to have an epiphany and go, I had no idea. And you need to have an idea of this to be a responsible, functioning member of society. And this isn't taught in schools anymore. It's like an 8th grader should be learning this, and they're not. And they need to have a base understanding of this stuff. And you, as a market participant, need to as well, because this explains to you economic cycles. And the reason I'm bringing this up to you is because you consume all day long all the doom, and yet the data disagrees with that doom. What Warsh is, what Warsh is going to do, what the consumer is, what inflation is. I actually wrote a piece last night in the middle of the night, and I started the piece off. I was going to post it on Reddit. And I started it with, I'm going to make this post right now in this comment because you fucking people get this wrong 90 fucking 9% of the time, and now you have it right. Like a clock, you're finally right. Because Reddit gets this shit wrong all fucking day, and so does in a bunch of other places. But we're in this place now. No, where you're whining about shit. It didn't fucking matter. Now it does. So heed my warnings when I tell you these things. As we move forward in our economy, they're going to run this shit hot unless the bond market has a freak out. Yeah, go keep going up there. Slap the fuck out of that thing. You have to be aware of this because it's like fast break basketball. You know, you get these old guys playing perimeter shit where they're shooting, then you put them up against a team that's fast break. We're moving into the fast break phase. So where they were wrong, they're now right. And they're right as to where we are, but they're wrong again as to what the outcome is. They think we're doomed, and we're not. What's going to happen is we're going to chase this inflation. And you have to, too. If you're sitting there and you're like conservative, you're going to be eaten alive by an inflation. Eaten alive. And you have to chase it because when we do actually go into real tightening, you have to be able to know that, hey, we're going into tightening cycle, and they're eventually going to suck all the money out of the system, so we're moving into protect mode. And then that's when you protect your money. If you don't do this, what I'm saying to you right now, you can literally win through all of these cycles and come out the other end, get shit out, and be worth less money. I protected during the beginning of the bull market. Then I protected during the inflation cycle. Then I protected during the tightening cycle, and they started eating me alive. I made 3% this whole thing, and 4% and whatever. Then inflation spiked, and it ate me. Then I got a hit from taxes. So it's important for you to understand these cycles so that you continue to grow your fucking money over the years and decades. And so that when you enter into this tightening cycle, we're not in it yet. And when we get into it, and you take a hit here and a hit there, and you've got less money coming in, you survive. Because if you don't fucking survive and they come to take all the money out of the market, what happens is people that you think were doing really well, they get swept up in it and they get eaten alive too. They get flushed from the system permanently and they never recover, ever. So this is a lesson to you out there if you're younger to heed these different market conditions, economic conditions, and business cycles. And not be consumed by the fucking warriors out there in those other time periods. They get left behind. They get left behind when it's time to make money. They get left behind even more when inflation rears its ugly head. And then when we go into the actual tightening, they got nothing. They might even be in debt. And they become the voices of the people that scream and yell and bitch and moan about how bad everything is. They are a detriment to you and where you're going in your own life. They've either been swept up in it, they've either missed the cycles, for whatever reason that may be. Now they're angry, they're divorced, they got no kids, no dogs, no cats. Hitting the bottle, they hate everything. They hate life, they hate this, they hate that. And if you don't want to be that person, if you're watching my show, you're not here to be that person, right? Do you want to fucking sit at Wendy's and shovel French fries for 30, 40 fucking years? The answer is no, then you listen to what I'm telling you. Because at every corner, there's someone trying to take that away from you, whether that's the government, the stock market, whether that's tightening or loosening. You're not taking advantage of it when the money's being given to you. You're getting caught up in when they're taking it away from you. And this is how people escape. So when you look at someone that you grew up with, you say, why is that guy doing better than I am? That guy's not smarter than me. That guy more than likely is paying attention to economic cycles. That guy is likely paying attention to debt cycles, like tightening expansion. Like that guy is probably buying a car at the right time, a house at the right time, or he bought it the wrong time and didn't know when he was young, but he stuck through it long enough, get into the second cycle, and now he knows. But you definitely don't want this to not know this stuff, and you definitely don't want to not know this stuff even if you caught yourself lucky, because they'll try to take it when you're older. Like, you ever see guys who are in like 60s and shit? Like, I can't retire now. They never knew. They just got lucky. They got caught in a cycle that was bad for them. And the reason I'm talking about this today is because we're shifting. We're shifting cycles here. We're leaving the soft landing, and now we're getting into the inflation phase. And this like whale of money will chase inflation. You will get run over by it. If I don't wheel and deal in currencies and debt and I'm just Bob on the street and I want to go buy that fucking car for 5 pencils and I come back next month and it's now 8 pencils. I didn't buy it. I didn't have access. I couldn't extend the loan. I don't have control over the money supply. I look at this car and it's now 5 or it was 5 pencils, right? And I actually didn't buy it. And now the pencil is or the car is now 8 pencils. What am I going to do? I'm either fucked because I don't have the 8 pencils, or I don't have a job to make more money to get the fucking car with the 8 pencils. I could be fucked, right? Or it was 5 pencils, now it's 8 pencils, and I'm a go-getter. So I'm going to go get a second job to get the 8 pencils, or I'm going to get a new job to make 8 pencils instead of 5 pencils. And everyone, even if you are not, is rushing towards that. You might not care about the 8 pencils. You might have thought, hey, I wish I bought the car at 5 pencils. Now it's 8. I can't afford it. Then you go through a contraction phase. Once it's up to 10 pencils, like, I can't afford that. So then we do a QT phase. Now it comes down to 8 pencils, but it's not a 5 anymore. Is it? And inflation keeps going up. We're now out of the QT phase, and now it's 10 pencils. And meanwhile, I didn't get another job. I didn't move. I didn't get cheaper rent. I didn't do any of the fucking things I was fucking told to do. And I'm making the same amount of money where I could only afford a 5 pencil car. And now that fucking car is 12 pencils, 20 pencils, 30 years pass. I'm still shoveling fucking French fries. And I'm left behind. Now, you might not want to do all those things, but you have to be aware at least that that's going on. And you have to be aware at least that there's a fucking elephant stampede of people trying to outrun all of this. And they're going to stampede over you. They're going to jump jobs. You might not. You might be like, I ain't fucking leaving where I live. I can't. Well, there's another guy named Jim over there, or Mike, or Bob, or Henry, Johnny, Bill. And he's like, I moved. Or I moved cities. Or I got a new job. Or I'm now working 80 hours. There's a fuck ton of them doing it, even if you aren't. But you have to be aware of that phase change, or that change in the economy. And right now, we're not only in this soft landing, but we have accelerated inflation. Larry Williams discussed this last fall. He said that by summertime, natural cyclical inflation is going to rear its head. So no matter what they're doing, the government's doing, U.S. is doing, war, this, that, nothing, doesn't matter. And that is starting to shine through right now in our inflation data, where natural cyclical inflation is rearing its head. And guess what? It's not coming from. It's not coming from tariffs. It's not coming from tariffs. In the Strait of Hormuz, it is coming through, but it's nowhere near as bad as electricity inflation. And the gas and oil inflation should come down at some point. When you look at like a gallon of gas for $2, it's been at $2 here and there for decades, right? Like an oil and gas chart is like this. Over decades, it's like this. If you look at like electricity, it's like this. Two completely different inflationary things, right? Gas is inflated, gas is deflated, gas is inflated, gas is deflated, right? Electricity goes up, right? A lot of other stuff only goes up too, right? Sometimes you get a big, like real estate will go up here and come back down. Stays in the same track, right? Might come down here for a bit, but it's right back on track again. So you look at the types of inflation that are coming in right now, where it's coming from, why it matters, how it matters. I know it doesn't all fit your zeitgeist for your politics, but I can show some of it to you today. So you know what's what. Look at that goddamn shit. $3.61. Woo, baby. God damn. I'm rich. I'm going to have to take some money off here. $739.69. Right there. So you and I are caught in the Warsh thing. We're caught in pay down debt with cheapo dollars. And we're caught also in natural inflation. And there should be a mad rush, barring a bond freakout, of an inflationary trade. And some of it's already been going on, as you can likely already see, right? The wealth effect is already happening here. But we got to look at some of this data. And the reason I want to look at this data with you is because there's potential for like a roll at some point near Opex end of month. And what I want you to do is be able to consume this data now. And I want you to be aware and cognizant of that data so that when and if we roll and have a correction, that your judgment is not clouded by what you'll be told on public, in the news, Wall Street Journal, Bloomberg, Twitter, Reddit, across the board. because this data goes contra to if we roll, why we're rolling. We'd be rolling to relieve some of the velocity, but that's it. The markets and the economy should be fine. And the markets and the economy will likely continue to chase inflation. In the consumer, they're going to tell you the consumer is in a really bad place, but they're not. 15% is, but the others are not. They're doing very well. And I'm going to show you that they're doing very well. Like, jobs are good right now. They're better than you think. The consumer is good right now. They're better than you think. And inflation is bad right now. And we know that Warsh likely won't fight it and that most of the country will be better off, and the stock market will be up into the midterms. Should be up into the midterms. Overall in the year, even if you have pullbacks or even if there's a 25 basis point hike thrown in, even a 50. And you have to be able to chase this all the way up and into the real tightening. When it comes time for true tightening, you know, we're going to raise rates to 7.14, something stupid like that. We're going to end QE. When all that really does happen, and it begins to break the economy, and you start to see job destruction, you start to see economic destruction for the consumer, you then need to be aware of it. You need to go into protect mode. You take all your money out of the stock market, you put it into the bond market, put it into savings, put it into anywhere that they can't take it from you, right? Trust funds, you name it. Anywhere you can hide it. That's not taxed. And it's going to be taxed by corporations. When we start doing QT, right? Corporations start taking your money. Like, why isn't this inflation broke? It's because everyone wants your money. All the governments are sucking it out. Corporations are trying to hoard it. And they're all trying to outlast the tightening part of the cycle. So you kind of need to be aware of where we really are. And sadly, if you are not aware, you get stuck in the 15%. That's what happens. You miss making the money when it was time to make money. You miss making money when we're chasing inflation. And then you get caught in the tightening cycle, and you get a ding here and a ding there. There's not as many jobs, and maybe you get laid off. Maybe you get divorced now, and you're just taking all these hits. And eventually, when you get washed like that, you don't recover. Or you have a bad day, it turns into a bad month, bad year. Before you know it, you're old and you're cranky and you're miserable. You're living in a trailer and you're living in the projects, or you're living in assisted living or something like that. And you feel really angry and spiteful at the world. In reality, you're being given a chance. All along the way, you just didn't see it. Or you're afraid of it. And you don't want to get caught in that stuff. It usually turns into a pretty rough time and go of it as you get older. And you're allowed to make these mistakes when you're young a few times. You can make a mistake in the first, you don't have to identify this when you're 20, but you luckily are sitting in this show with me. So I get to explain these things to you simply so that you can then do your own research in this stuff so that you don't get caught in this stuff. If you've never experienced it, it's brutal. Especially it's brutal if you've been lucky throughout these cycles. But you're only given one chance. By the time you're 30 or 40, you have to have figured this shit out. And it's really disappointing that it's not taught on a basic level to an 8th grader. They're smart enough. Teach an 8th grader this. And then you teach them another course like this in college before they graduate. So they have a basic understanding of these very simple concepts, so that you have a good time in life. Because otherwise you become, you have a tough go of it. No one wants to have a tough go of it. Don't let anyone tell you that money doesn't buy happiness, because it does. You be able to pay your bills off and not worry. It feels good when you get older. You don't want to like start out like not making it, struggling, working your balls off, go through 20, 30 years raising kids, raising or being married, having a partner, and not be able to jump on that train at least once. Be successful, make the right investments, and then when you get into your 50s and 60s and 70s, be able to fucking enjoy your life with some level of comfort. Any. And not be like, you know, like, you see like an old person, they're like working fucking Walmart, and they were, you know, like kick-ass degree, kick-ass life, kick-ass career, and all of a sudden they're only employable at Walmart, and they're struggling. Sometimes they have to divorce their husbands and wives and shit. All right, declare bankruptcy, and you're spending your twilight years struggling. You don't want to be that person. It's not fun. Fuck no, 35 is not too late. I would say by the time you're fucking 50, you got to figure like when you're like 18 years old, you're going to go through at least 3 cycles. At least 3. So like the first one, you normally in the first one, if you haven't learned about this stuff in high school and college, you'll learn about it on your first cycle that you go through. And if you can recover from that and make it through it, you're going to be fine. I always say to people, like, the best time to open a business is during a recession. And everyone tells me no. And I'm like, you're out of your minds, dudes. Everything's on discount. If you made a bunch of money in an expansion cycle and now you're in a tightening cycle and you're the guy sitting there with fucking cash, you're going to make out like a bandit. I got a buddy who I was growing up with. I'm still friends with him today. And he lives in Las Vegas. In 2008 or in 2007, he was on the flip side of this. I got another friend. I think Joe Donut has said this on the show. I got a tale of 2 people. Joe Donut went through the first 2008. He had bought a house. They had free money everywhere. Joe was given money, he bought a house, and the market dumped and crashed. And his home value went to zero, not zero, but it went way down. And Joe had to make a decision. Am I going to just wait for the next cycle, or am I going to eat the bullet? He waited. And he actually did very well waiting. But he learned a lesson, too, in that, right? I got another buddy. He tried to buy a house, or no, he owned a house. And he was moving into a larger home. And he was doing that when, so he had like sold his house, and he had like a month or 3 months between signing the contract for the new house, and he was cash rich. And the deal fell through for his new home when the economy was crashing in 2008. So he's sitting on his ass with his thumb up his ass with a fuck ton of cash, and he got a discount. He was living in Las Vegas. They were building out north of Vegas and Henderson and all that area. He fucking bought a mansion for, it was like a $1.5 million mansion being offered for cash for like $150 or $300 or something. And as long as, but you had to have cash on you. The bank said, like, we have to put this much cash down. We need this cash. And if you don't know this, when in tightening cycles, banks can call your mortgage in, even if you're right side up on it. I don't know if you know that. When the banks need cash, they will do anything to get it. And this is during QT when cash is being sucked out. So if you're sitting there with your finger up your ass and you got a bunch of cash on you, and $150K at that time was a lot of fucking money, they offered him a house and he bought it. So if you time these cycles correctly when you're really young, you can really make out like a bandit by the time you're an old man, is my point. If you can identify them, at least, if you go, let's say you hit 1 when you're out of high school and college and you get banged up and you get 1 more chance, you probably go through at least 2 more in your lifetime. 3 minimum, if not 4 or 5, depending on how old you get. And if you've never been able to identify these things in your life, you've just wondered like, hey, I'm 50 years old and I'm fucking broke. It could be due to that you just never were taught about economic cycles. And it's never too late to become aware of them and become aware of when you should be doing certain things. Like, is it time to buy a house or not? Is it time to start a business or not? Is it time to do this, buy a car? Is it time to, invest in solar or not? I had this really fucking weird thought the other day, which I know gas is up really expensive right now, but I was like, man, if gas was $2 a gallon right now, there might be a moment where it'd be cheaper for you to run a fucking gas plant at your house to generate electricity rather than paying for electricity from your local government. Or if it's run by a public partnership or not, or it's private or public-private or whatever. Well, I'll show you that here in just a minute, because there's different types of inflation. We're all driving electric cars now. We're all driving. The big push right now is for you to all have electric heat and electric appliances like stoves and shit. I would never want that. You'd be out of your mind not to want either your own solar panels at this point or as much gas running shit in your house as you possibly can, whether that's your water heater, your stove, and your furnace, because those prices come down. They fluctuate. They don't run the same inflation track as electricity. I think we went through this in the 80s and 70s too, where everyone put electric into their homes and then it became obscene. People started reverting back to like oil and natural gas and propane to heat their homes because electricity, the inflation, and electricity just goes up. We'll talk more about that later. I haven't figured out that whole thought process yet, but we have to look at some of this data today. It's important because if we do roll down, you might get sucked back into the doom on a roll and think, oh my God, everything that I'm reading and consuming says the consumer is fucked. The market is fucked. We're going to tighten like mad dogs and I need to start protecting. And in reality, it's probably just a pullback. And in fact, the bubble is likely going to continue on. Mike Barry is likely wrong that the bubble is popping. There's a fair chance that McGilligot is wrong too. And Pravorsky and all the other guys from the street. You'll have the crash or the large corrections or the potential for it, but it does not guarantee we're going to move into the bubble popping and the end of the bubble at this point. You should continue to wait for that to pop, and the sure sign of it would be the build out is done, and all of the companies in and around it have IPO'd. Like SpaceX is likely aware of this. Amazon would be the example. Amazon was a late IPO. They caught the last run up to the top. OpenAI is probably hyper aware of this as well. And so they're likely going to time their IPOs for the tail end of the bubble. If that makes any fucking sense to you, or if it doesn't, I don't know. But if you're looking for the bubble to pop, it's probably not just because of a correction or even a violent correction. And like the Mike Barrys and the Charlie McGilligots are probably aware of this too. That they can call the massive corrections, and they'll likely be right once or twice or three times. And then the third one or fourth one, they'll say, okay, now it's a bear market. And they'll look like they knew all along. You'll forget about all the other nonsense, like, oh, they called the top in May. You'll just know that you got the correction. You'll be satisfied. You'll stop that. You won't even think about them saying that was the top. Come to the next one, they'll tell you the same thing again. And they'll tell you the same thing again. And then eventually they'll say, yeah, that's the actual top. And they'll look like rock stars to you. Meanwhile, though, your trading did not reflect it. Your investing in the stock market definitely didn't reflect that either. You become more cautious. You're not chasing the money in the inflation trade. You're pulling back from that end of market melt up that takes place. It's very, very, very common. So this is likely the stage that we're in right now. We're transitioning into the chase inflation trade. And that chasing inflation trade is not be more reserved. It is fucking buy any correction. It is exposure. It is inflate my money, even if it's worth less. And it's definitely not in the protection phase yet until we get into legitimate, confirmed tightening cycle. And remember, a point, or let's say we go up 0.25 or 50, we throw 50 BPS on the Fed's rates, right? That just brings us to neutral. That doesn't even fucking bring us to fucking tightening. We're literally in negative rates right now. You ever hear like, you want to go to negative rates? And they go, we're never doing that. We're in them right now. As of the data that came out this week, we're in negative rates right now. We're in an accommodative stance from the Fed and from the Treasury and the executive, because they're spending, aren't they? We have expanded deficit, expanded debt. So we're in expansion right now. And we're in what? Accelerated expansion, aren't we? We're in the chase. And you get into a long race and you're ready. We're in a bull market. And we're running a marathon and we've done, 20 miles. And then what does your coach say to you? Kick. The race is almost over. Pick it up. Faster, right? Run. No more slow pace. Put all you can into the last leg of this. And that's likely what we're heading into right now. The last leg where it's mad dash. In these mad dashes, we come into corrective moves. You'll have big slice down recovery. We had one last spring. Last year's wasn't too bad in the fall. We had another repeat this spring, though. We may get another one in the fall, right? We might just top out. Top out in the fall, top out in spring, top out, all-time high in March, and then you get your failure to get a new high in the fall of 2027. Meanwhile, everything's fucking cheaper, money's cheaper. You miss that entire run up because you're too conservative when we're just getting to the point of running faster. See if we can buy a dip here at 12 o'clock or 12:30. I have closed this trade if you want to know. I think I said something in Twitter or in the Discord. I'm looking for another dip to get long again here. There's a target right here left. The next two upside targets are 739.66 and 740.12. Right up in here. Oh, Jesus Christ. You need a hug, buddy. Now I know why people think I don't know how to spell. So I'm doing too much, like typing and doing other shit. It's now 11:30. Want to buy anything we can down here? Give me a discount, baby. Let me just check the hour here really quick. R1 is 740.74 up here. Next dip buy is way down here. And to be honest, it's probably down here. We have a half an hour here. Just be patient. If we can catch any kind of dip down here, that's what we want to do. Remember this one and this one right here. I'd like to see the rainbow up here, to be honest with you. I'd love to see like either the rainbow and then down to go up there. I'd like to see that, but it's not a ton of space. Like a pop and drop kind of a thing. The two targets above are 739.66 and 740.12. So this is the 66 right here. And I'd really like to see like a roll. I'd like to see us like pop our heads up, come back down, and like hammer all this out if possible. This is that 740 area. Like we gotta build this whole thing out up here to trade 745. So we got a lot of work to do up here. Have more ice water, please. Thank you. Yeah, I was gonna sell out a snap coming into Opex, but I think I'm gonna wait. It's been a fucking dog. I still own Surge too. I've been trying to exit a lot of my garbage. You got some half-eaten crayons? So just to digest that stuff, okay? We're gonna move on into we're gonna get out of we're gonna finish up this like inflation thing for the week. Seems like it's an appropriate time. We're gonna start with labor. Then we're gonna do CPI. Then we're gonna do debt to income ratio. And I'm going to read some of this stuff to you, and if I need to show you a graphic, I will. Give me just 2 minutes. I just need just 2 minutes, okay? Give me just 2 minutes. Just want to freshen up here. Hold on. Ba-ba-ba-ba-ba. Okay. Hold on. I got to put my weights down here. Hold on. I'm going to get a fucking hernia doing lifting weights like this. Okay, so I'm over here like trying to fucking lift weights in the chair and shit. Okay, so I want to show you something here. I want to give you a microcosm and some proof to start this next segment of what I'm discussing with you. Now, I just read a bunch of articles saying the consumer is fucked. And this was based on like consumer data that came out earlier this week. Now, I found it ironic because I was getting angry about it. I was like, these fucking, and I'm like, oh my God, and everybody's regurgitating it and fucking, oh my God, they're discussing it like it's real. And these fucking guys haven't fucking taken 2 goddamn minutes to go to the fucking BLS or the fucking Fred. I mean, literally take you 5 fucking minutes to get the actual data. You don't even need like a Wolf Richter to explain this to you. This is simple shit. And this also is in line with the Ray Dalio stuff. There are simple things for you to, like as a trader, okay? Whenever you're is that going up right now? Ooh, yeah. Ooh, baby. Do you know what I want? Higher prices, I want to chase them. You say I should be more careful? I don't think so. I think we're inflating. Ooh, baby, we're gonna inflate. The reason I bring this up to you is because when you're out there regurgitating, when you're out there saying the what about this and the what about that and the what about this and the what about that, and then someone asks you, where did you get that information? And they say something like, well, it's all over CNBC, or it's all over Bloomberg, or it's all over Twitter. You'd be shocked at if you ask that person, did you actually go and look at the fucking data? Just take like 5 minutes. Fuck the article. The article cited some data. Did you go look at it? And they just say no. And then that headline is like, it's like telephone, you know, and it's spun and spun and spun and spun. And now it's like hitting the most talked about financial news that day. It's on trending this and trending that. And you just buy into it because an authority told you. And this isn't like the conspiracy whack job. No offense, I shouldn't say that. But like the conspiracy theorists and stuff that are like, I did my own research. I'm talking about going to the actual fucking research. I'm not talking about you digging up some fucking thing that nobody else knows. Some like rando on a Substack. I'm saying go to the fucking Fred. They're all using the same data. Hello. We picking our heads up there? What's going on up there? Where's all-time highs at from this morning? Hey, all-time highs. What are you doing up there? What's up, buddy? What's going on? So, it's not like this is hard shit. And I want to explain a part of this to you right now if I can. So, here's a comment. Now, I'm not trying to call this guy out. I'm not really interested in this guy's name. And there's actually nothing bad to say about this guy because I get caught in this. I think we all do. We all get caught in this. We're all guilty of it, and it's not all our fucking fault. It's in any time in history, this is probably the worst time in history for information. For all of us. And this guy, he says, auto loans seriously delinquent rate is at an all-time high balance, although the new seriously delinquent flow has stabilized in the last 2 years. Close to the same thing with credit cards. Seriously delinquent rate is close to the record of the GFC, but flow into seriously delinquent has stabilized in the last 2 years. Does anyone have any insight in this? And what this guy is doing is he probably consumed this from like, you know, Quoth the Raven or Mac 10 or Northman Trader And it's been like spun and spun and spun and spun, and so it becomes regurgitation. And Wolf took the time to respond to this guy. Now, Wolf can come off as a fucking asshole. I can too. But he's not an asshole. He's trying to, his attempt here, Wolf's attempt here is to say, hey, well, I'm going to read what Wolf said. And the reason Wolf is saying this is not to be an asshole or a cocksucker or anything. He's saying it because he's like, hey, you got to stop. You got to break your habit of consuming this shit, regurgitating it, and then trading or investing based upon the shit that you're consuming, especially in something that's so simple and easy to research. Like you can read a story and then literally go to the thread and see if they're bullshitting you. Because data is one of the most easily manipulated things in the world. Data can be spun any way you want to read it. And if you haven't taken classes for probability and statistics and you don't realize that it can be manipulated, you look like the fucking product, right? You're the sucker. I'm the sucker. And the data spinners are getting even better to where you have to have a very high level of calling out bullshit. It's very easy today to be bullshitted, right? AI, clear as day, right? What is AI trying to do? Not have you be able to identify it, right? Pass by you that the human test. Even AI is built upon scamming you and I. Good AI, you should not be able to tell that it's not a human, right? Should not be able to tell that it's not a human. So Wolf says, auto loans seriously delinquent is at an all-time high. That's completely wrong. You're probably citing some brain-dead blogger that was looking at the New York Fed's transition into delinquency rate, which is not a delinquency rate. Which is not a delinquency rate, but an annual flow that some on-loan research over there concocted years ago, and that the idiotic media and brain-dead bloggers misrepresent as a delinquency rate, and that no one really knows what it represents. Number one, subprime auto delinquency is at an all-time highs at around 6.8%. But subprime is only a small part of auto loans handled largely by subprime specialized dealers and lenders, some of which blew up last year, which I covered here in detail. The yellow line is Fitch. And actually, they blow up all the time. I don't know if Wolf says that here, but subprime lenders focus on bad shit, bad people, and they blow up all the time. And they're actually one of the smallest portions of auto lenders. So a spinner could spin that information and say, oh my God, this subprime loan maker blew up. They always do. Always. Good markets, bad markets, doesn't matter. And they're not the masses. Prime delinquency rate for auto loans is at 0.42% prime, which is historically low. Equifax publishes monthly data for overall auto loan delinquency rates, but only go back to 2020, the red line. But 2020 was near 0% trough of free money pandemic. Delinquency rates before the pandemic were roughly where they are now, and far higher than during the Great Recession. I discussed this extensively in detail in my auto loan articles. You need to read them. Next one is coming in a few days. Wait a minute here. And the reason that I bring this discussion up from Wolf is because data is fucking molested. And it's not like this data is not public. It's not like it's not easy to find. And you got a guy like Wolf Richter that's even willing to explain to you, write out for you, hey, this is what you're really looking for. If you want the real delinquency rate, that for prime auto loans, this is what you want to look at. He doesn't mention it in this response, but I can tell you because I know, because I track that shit. that subprime auto loan makers, they blow up all the fucking time. All the time, every year. And they are not we base delinquencies on. We base delinquencies on the masses that have good credit, that have car loans. Are their delinquency rates going to the moon? I don't care about the other 15% or if that 15 is 10 or 5 or 20. I care about the other 80, the other 85%, the people that contribute to the economy. Not the absolute poor, not the retired, not the illegals, the true illegals that are working under the table. Like, those are all small things, but you get some data that is misrepresented, and all of a sudden, the consumer is fucked right now. And so we walk around thinking, oh my God, I'm too afraid to put money in the market. Consumers getting eaten alive right now. This is going on. That's bad. This is bad. And in reality, the data that you have is wrong. It's meant to sell fucking newspapers. Well, let's see if we get into this 12 o'clock and down here and see what we can catch. Do you get what I'm saying here? So I'm trading the stock market. I'm trading the bond market. I'm putting money in savings. I'm buying a house. I'm selling a house. I'm getting a job. I'm not asking for a raise, or I'm asking for a raise. And us as responsible adults, we need to know when we can ask for a raise. We need to know when we have to jump a job. We know when we have to move, when it's better to sell and when it's better to hold, when it's better to buy. Could be a home, could be furniture, could be food, could be a restaurant, could be high-end restaurant, cheap restaurant, shop at the grocery store. You can find all that fucking data and know when and where you're going to get the best deal or when you're not. Hey, everybody's out eating McDonald's right now. It's cheap. You can find that data. Hey, no one's eating McDonald's right now because the prices are too high, and the herd of elephants have now moved over to Applebee's. Or, oh my God, they're all shopping for steak now. They're not going to the steakhouses. The steakhouses are now too expensive. McDonald's is too expensive, but a steak is cheap. And look, the herd's going over there and they're saving money. So if you're making these financial decisions in your life, well, even if it's not the stock market, there are the best times to do these things. And you want to know when the real times to do these things is and when the not so real times. You need to know if you should have risk on market or not have risk on market. Is the consumer fucked right now? Is the consumer not fucked right now? Is the fucking economy fucked right now? Is the economy not fucked? Can people fucking afford to spend $6 on gas or $9 on gas? Can they not afford $6 or $9 in gas? Well, I'll assure you one thing. If it fucking bleeds, it reads. If gas goes to $6 a gallon and you can't afford it, that ain't going to sell no fucking newspapers, is it? So what do? I pull data that looks bad for the consumer. I run a story saying this consumer can't handle $6. And in fact, that's not true. Or maybe it is true. If it is true, shit, let's pack it up. We're out of here. But if it isn't true, and we're, in this case, coming in inflation, you got to keep the risk on. If you have a correction, you have to know that we're getting a correction. It's not tied to the consumer. It's not tied to the economy. We're just blowing off some velo. Cooling the jets a little bit until we make the next leg higher. So it's important that you know what you're consuming. And I think right now with Warsh coming in, I think right now with a change of regime in the Fed, we seem to be coming into something with China. Whether it's good or bad, you want to know the impacts on this, on the economy, and on where we are with the consumer. So we're going to start at the top. And there's two more bits of data that we don't have right now that we're going to get. We're going to get like retail sales coming out. We got some data that has not been released yet. And then we go through a data desert in the month of the end of May. Like middle of May, there's no more data coming out. But for right now, like most of the data for current is out. There's two more pieces we're missing, but the majority of it is here. So we're going to cover most of it today. And when the last two pieces of data come out, I'll cover those as well so that you have a clear understanding as to where we really are in the markets, where we really are in the economy, and where we really are with the consumer. We're going to start with labor first. The drumbeat of job reductions at the federal government continued in April. I'll put that right there. With another 9,000 cuts in its civilian employment, including employees who departed earlier but whose severance packages ended in March. Since January 2025, the federal government has shed 345,000 civilian jobs, or nearly 12% of its staff. Federal government employment is now down to 2.66 million, the lowest since 1966, accounting for just 1.7% of total non-farm payrolls. The lowest in the history of the Bureau of Labor Statistics going back to 1939. That's huge. State government employment edged up in April from March, but is down by 53,000 since January 2025. Combined federal and state governments have shed nearly 400,000 jobs since January 2025. Local government employment, largely composed of educators, first responders, and healthcare workers, was unchanged in April and up by 149,000 since January of 2025. So if you're just this information I just said to you about labor, just let this cool off over here, by the way. Let this all like 12 o'clock flows cool off in here. So what did I just tell you? If you're trying to get a job in the fucking government, where are the jobs right now? At the local level. If you're a federal or state worker, your best bet for a new job in government is on the local level. So you already know some information here. If you're a functioning part of the society, you can go to the Fred and you can find out who's doing the actual hiring. I've been spinning my wheels, sending out resumes to the federal government, and nobody will hire me. Well, no shit, Dick Tracy. We're shedding jobs at the Fed. Not the Fed, like the Reserve, but the Fed, the federal government. I spun my wheels for 6 months, and I finally got picked up by my local municipality. Did you apply to those earlier? No. So, as an adult, for decisions you're making in your life, you can likely find the data as to the easiest path for you. The private sector added 123,000 jobs in April, after an upwardly revised 190,000 additions in March. The month-to-month data yo-yo has been quite strong. The huge private sector in the U.S. doesn't flip-flop from month to month on a dime like this. It's just that the data is yo-yoing. Wolf's take on this is that it's the weirdest job market he's ever seen. Ever. It's not a bad job market, it's just weird. That means it's harder for you to look for work. Harder than it's ever been. It's not impossible. It's just that if you're looking for work right now, you have to have some idea of where to look for it. And most people don't know who is actually hiring. They go to Google and they go, I'm going to look up what jobs who's hiring right now. And CNBC comes out with some fucking stupid article saying something like, hey, people at your age are tripling up on side hustles. That doesn't fucking help you, does it? It's bullshit. You want to find out who's actually doing the hiring. And especially in the career that you're in. So the 6-month average job gain, which flattens out the yo-yoing and shows the trend better, rose to 68,000 for April. The highest in a year. In a year. The highest private job creations in a year is right now. Is that a headline? Is that a headline anyone wants to read? You know when they give you that headline? When we're at the top of maximum employment. They don't tell it to you right now. It doesn't sell newspapers, does it? If you go on Reddit right now, no one can get a job, but in fact, the job perspectives or jobs being offered, some of the best in a year. Over the past 12 months, private sector employers added 511,000 non-farm jobs. These job gains are low for the U.S. under normal conditions, but now are not normal conditions, as the labor force continued to shrink in April amid the crackdown on illegal immigration, tightening up of legal immigration, and the continued wave of boomer retirements. But the federal government has shed about 12% of its headcount since January 2025 and is down to 2.66 million jobs, the lowest since 1966. So you're finding out where jobs are being offered. You find out who you're competing against. Hell, I'd be writing my fucking resume to destroy a government worker, right? Fuck all these federal workers. I'm a private sector employee, bro. You want me. You don't want some hack from the federal government. That's who you're competing against right now. I don't care about them. You shouldn't either. I mean, I care about them. I care about a federal worker being laid off, but I care about feeding myself, my kids, and my wife. It's still competing for a job. And they're going to compete against you, too, whether you want to or not. So you have to see who's out there fighting against you for work. And work offers are actually getting better, and they're in specific places. So it's not all bad right now, is it? Even though you're being told that it is. Total number of non-farm payrolls, including government, rose by 115,000 in April, and by an upwardly revised 185,000 in March to a record 158.7 million. The 6-month average rose to a gain of 55,000 in April, the highest in 11 months, despite the losses at the Fed and state governments. The low point was in October of last year. This doesn't sound like a worsening job market. It sounds like an improving one. Normally, such low job growth would cause the unemployment rate to rise sharply, as the labor market would not be able to provide enough jobs for a growing labor force amid the influx of immigrants and young people moving into it at a faster rate than older workers retiring and dying. But that's not happening. The labor force has been dropping since last fall amid the crackdown on illegal immigrants, a tightening up of some work visa programs, and the wave of boomer retirements. In April, it dropped by another 92,000 to 1.69.99 million. Over the past 6 months, it has dropped by 1.45 million. So you actually have less competition for these jobs, and the people that you are competing against likely were ex-federal workers. And we have private sector replacing some of those federal government jobs. So let's say you're a federal worker. Hey, I just spent 15 years working for the federal government. I'm going to try to get a job The first place you want to be looking is where? Local municipalities, right? And if you're not able to get a job in the local municipality as a federal worker, where are you looking to find work? In private sector, right? And if private sector is replacing the federal government jobs, you start looking at corporations that maybe offer some of the same things that the federal government used to do. All of a sudden, your job search might become a little bit more fruitful. The labor force is the supply of labor composed of people who are working or actively looking for work. And this supply of labor has shrunk by 1.45 million people in the last 6 months due to the 3 reasons I gave you. The boomers are in one of the last waves of their retirement. We're tightening the restrictions on legal immigrants, and we're tightening restrictions on illegal immigrants. And there's a knock-on effect with new illegals coming in the country that's saying, I'll just wait until Trump's gone. Wait until a Democrat comes into power. Even though the Democrats remove more illegal immigrants. But the mindset is we're not coming to the U.S. until then, right? The labor force data is based on household surveys that are adjusted annually at the beginning of the year to the Census Bureau's revisions of the U.S. population. And so the unemployment rate has been roughly stable at a very low rate. In April, it was 4.3%, the same as in March, which is what? Historically maximum fucking employment. Even 4.5. So the unemployment rate has been roughly stable at a very low rate. In April, it was 4.3, same as in March. Down a hair from 4.5% last fall and up a hair from a year ago. It's like a frying pan. We're literally in the best environment right now. We're in the best environment right now. And there's less jobs, but there are less people to fill them. So there's a little bit of like parroting, isn't there, going on? Jobs are bad right now. I can't find a job. Are you looking in the right place? Jobs are bad right now. There's not a lot of jobs on offer. Did anybody tell you that we don't have as many applicants? No, they just ran the it bleeds, it reads. So you're at a disadvantage of where to look, and you're at a disadvantage of being told there are no jobs. You're also at the disadvantage of what? AI bullshit, right? With the HR directors. You got a lot of bullshit coming your way. So your responsibility as a productive member of society is to fight through those things. Your responsibility is to say, okay, how do I find this fucking job that's supposedly there? And I'm here telling you how to look for it. The unemployment rate reflects the number of unemployed, the unemployment rate, not your labor supply, but your unemployment rate reflects the number of unemployed people who are actively looking for a job. That is divided by the labor force I just told you about. Right now, it's 7.3 million out of what? 450 million. I think it's 450 in the U.S. Let's make sure I got numbers right here. Yeah, I said 450 million. 350 million people in the U.S. I was off by 100 million. Sorry, I got a lot of numbers in front of me. The unemployment rate, that doesn't even include the actual workforce. Let's look at the workforce. How many Americans eligible to work? The U.S. labor force participation rate is 61.8% of the 350 million. The unemployment rate reflects the number of unemployed people who are actively looking for a job. That's right now, that's only 7.37 million. So you're still talking about a very small percentage, isn't it? So you've got 61.8% of eligible workers out of 350 million. And actively, only 7.3 million are looking for work. They're under or unemployed. But they are the loudest fucking voice, aren't they? The loudest voice on every social media you see. They're the loudest voice in every article that's printed. And I think it's bad for those people, but is it bad for you? It's not for most. You are the abnormality. You're not the norm. The unemployment rate reflects the number of unemployed people who are actively looking for jobs. So that's 7.37 million divided by the labor force. And the actual labor force right now is 169.99 million. So 7.3 out of 170. From a long-term perspective, this is a tight labor market. But not because there is a sharply growing demand for labor. There isn't. It's because of the declining supply of labor. The prime age labor force participation rate, and I know this, they said last week, right? I read an article last week that said the prime age labor force was shrinking. I read that. You can Google search this. Look up like men are no longer taking jobs. Look that shit up on your own. Look it up. Go on like Google and type in. It's like headline news this week. Well, I'll tell you something else. That was a lie. The prime age labor force participation rate shows this tight labor market. The prime age labor force consists of people between 25 years old and 54 years old. It eliminates the issue of the retiring boomers. When people retire and stop looking for a job, they're no longer participating in the labor force, but remain in the population until they die. Get up there and squeeze that shit. In April, the prime age labor force participation rates remained at 83.8%, and the 3-month average was also 83.8%. This range has been the highest since the dot-com bubble in the 1990s. It's the result of more people getting pulled into the labor force by demand for labor as the supply of labor is constrained due to the crackdown on immigration and boomers retiring. Let me just show you this right now. Because I know that the story broke last week about the prime age participation rate being the worst ever. People are checking out. They've given up on jobs. That's not true. They're getting jobs. Let me show you something. Let me show you the chart on this stuff because it's kind of wild. And this kind of harkens back to what I was saying to you earlier about being aware of where we are in terms of risk. Being aware of where we are in terms of business and economic cycles. Like when we're in a tightening or we're in an expansion phase or an inflation phase. And that you need to know where the fuck we really are because when things are bad, you're going to get fucked. So this is 1990 and 1992 and 1996 right here. And you can see the workforce participation rate is peaking. And if you look really closely here, this is 1997, right where we are. Not 2001, not 2000, not 1999, 1997, 98. This goes against what Mike Barry says, doesn't it? I've only seen this when it was late 2000. Actually, Mike, you're fucking wrong, bro. You're wrong by about 2 years, maybe 2.5. Because right here, we're just about to break up and over. Yeah. And let me say the next thing to you. If you've given up on the workforce because of some fucking story you fucking consumed and then regurgitated and sucked each other off in doom over, what does this show? You want to be a part of this participation rate as much as you possibly can. Right now. Right fucking now. Why? Historically, if we break this bubble at some point in the next 2 years, you get flushed out. We go into a contraction of the economy and a contraction of money, and there might not be a lot of jobs. So you want to get as much work and money as you possibly fucking can right now. And instead, you're being told there's no work. Don't bother. So you're going to miss this participation at the end of the bubble. And then you're going to be over here not participating and get fucking sucked and dragged down to the depths of goddamn hell. And you're never going to recover. And this is actual fucking data. Not the fucking, if it bleeds, it reads. So can you imagine all the people on Reddit being told, hey, man, people are actually getting jobs. You should try to get one. Here's where to get one. And you should do it right now because in the next year or 2 or 3, you may not have a fucking job. So not only are you stuck at a job at $20 an hour, you might get your rug pulled on you in a couple of years. Get your ass up and fucking get a job, man. I don't know where. Here, I'll show you the data where to look for one. Think about that. Think about all the shit that you consume out there, and it's literally the fucking opposite of what you're consuming. And Americans fall for this all the time. That's how we get stuck in the bottom 15%. And we get left behind and left behind and left behind, and then decades pass, and before you fucking know it, you're an angry man, right? And then you got hindsight. God damn it, if I had just fucking worked. God damn it, if I had just invested in the market. God damn it, if I just chased inflation. God damn it, if I protected my money when it was time to. Next target, 740.92. Well, we already hit it? Well, we're close to it. So I want you to think about when you're out there like consuming, and then you're formulating a plan for whatever you're doing, stock market, personal life, business life, whatever it is. Most of the free shit that you're consuming is fucking wrong. It's wrong. It's being used to manipulate you. It's being used to get a leg over you. When I was young, I never cared about what the Joneses were doing. My dad said to me, there's a rat race out there, Jim. It's rough. He said that to me. I didn't know what he meant. All my peers I worked with, I was like, this is my friend. Meanwhile, my friend was trying to fucking claw and drag himself over me. It's a shitty thing to say, but you start to figure it out when you get older. I didn't really care what I was doing. There was no one near what I was doing, in my view. So I never really cared. But I know for most people, they are fighting other people to get a leg up in life. And if you can use any of this stuff to your advantage, use it. This is the best chance you get right now to work. Things are going to get worse eventually. And you're going to have more than just your arm tied behind your back. If you're feeling that right now, you're going to have your arm, your leg tied behind your back. You're going to have a muzzle on you. And you can see the data that I just showed you, that graph, when it goes down, it's fucking messy. And so you need to do as much as you possibly can in the time periods where we're in expansion. Average hourly earnings rose by 3.6% year over year in April. 3.6% year over year. That can't be true. They must be lying. No, you just didn't ask for a fucking raise. You didn't just jump jobs. That's what happened. It's like rent. I ask $5,000 for an apartment and you fucking just pay it. You don't just pay it. You say, how about 4? I go, fuck you. I can't do that. So you should ask 5 more people. How about you? Can you give it to me for 4? No? How about you? Can you give it to me for 4? How about you? Can you give it to me for 4? Negotiating. And you don't know why they're asking that obscene money. Could be a multitude of reasons. I might not want to rent it. I might want it to sit. I might be required by a charter to rent it at a certain price. Yeah. I might be willing to not have a renter for 3 or 4 months for the extra grand or two because in 2 or 3 months I'm going to make all that back. I might have a window where I can go like an hour, charge more money and only reduce it if I've missed my window and charging more for less time somebody using my property. You don't know that as the renter. The reasoning why I'm having that ask. And that ask is likely not real. And if you ask enough of those people with that ask, you might get, hey, I'll take $1,000 off. It's been unoccupied now for like 2 years and I'm not making the money that I've had with the people in there and stuff like that. Yeah, $1,000 less. And all of a sudden you're like, hey, I just got a $4,000 apartment. I beat everything that's out there trying to be against me right now. I get to keep an extra $12,000 in my pocket every year. Woohoo! Doing better again. What I'm not fucking doing is sitting on Reddit and whining and bitching that rents are high. I'm out there fucking hustling. Can I get $1,000 off? Can I get 20% off? Can I get 5% off? Can I get 10%? Anything off? And negotiate. Same with work. Is anybody telling you that wages have gone up 3.6% year over year? Of course not. If I own a business, I don't want to tell you that. I don't want to offer you that unless you know and you ask. But you're being told wages are stagnant, so you don't. You got some asshole on fucking Reddit telling you wages are stagnant, bro. So you don't go ask your boss, hey, wages are up 3.6%. My fucking pay doesn't reflect that, man. Oh, you don't want to give it to me? Okay, I'm going to start looking for work and ask them for it. You might not tell them that, but. Whew. Look at that fire. What's the target here? Oh, Jesus. We got equal legs coming up right now and a new all-time high. You know what this is, right? Equal leg. New all-time high. Then looking for a cup and a handle to go higher, right? All-time highs, S&P 500 just now. Supposed to be crashing, supposedly. Trading 741.30. Look at me, ma. Clearly, all of these global layoff announcements by U.S. companies since 2022 reported breathlessly in the media, and actual layoffs that occurred in the U.S. despite continued woohoo! Yeehaw! Hello, do my old friend. Trading 741.77. We're going to trade 750 in my view. We're going to fucking melt right up into Friday. 748 and change. We're either going to do it now or we're going to do it right on Friday. It's one or the other. We're going to do it early or we're going to do it later. Clearly, all of these global layoff announcements by U.S. companies since 2022 reported breathlessly in the media, and the actual layoffs that occurred in the U.S. despite continued but slow job growth and falling labor supply have the corporate desired effect that workers have curtailed their demand for higher wages. No shit. If you go to Reddit right now, they've done their job. If you go to Reddit and regurgitate what they're saying, corporations have done their job. You're the person you trust on Reddit is telling you can't get a higher wage. When in fact you can be asking for a higher wage. Coming into R2 now, it's 7:43:39. There is trend right there. That's the target on the day. That's that dotted line that's up there, way up here. So they've done their job, right? You're missing the hiring. You're told there's no jobs. You have to find out where they actually are. There are layoffs, but they're not probably with what you're doing. They're in the government, federal government, right? And wages have gone up 3.6%, and you've been told there's no wages. So corporations have done their job. But now we're entering an inflation cycle, a natural cyclical inflation cycle. And that means what? When I gave you a warning earlier today, if you're in the bottom 15%, you need to start looking for better paying jobs. You need to start asking for more money. You need to probably find aspects of your life to pay down debt. And you probably need to be looking for cutting some cost out there wherever you can. Whether that's even picking up sticks. I'm out of here, moving to Austin. Pay $2,000 for a house. I can get a house down there for $800. And there's a job waiting for me down there. Just save myself an extra $1,000. And I'm making an extra 5% or 10%. I got to now outrun inflation. I got to do what I got to do it. I'm in the market. I need to outrun this inflation that's coming. I need to fucking go all in. I need to run up with it so my money is not worth less at the end. Because inflation keeps climbing over the years, doesn't it? Your money is worth less and 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 less. But now inflation is accelerating sharply and is about to reach this rate of wage growth, putting wage growth at risk of falling below the rate of inflation. We don't want that, do we? And where are wages? You said that wages have been stagnant, right? They have not. They've actually just fallen back into line for historical norms. They're right where they should be. Let me show you this. There's another neat one for you to disprove half of the crap that you've been reading. Like for what you actually need to know, let's look at it. So this is average wages, okay? Now this is like inflation. Wages go up. They go up, they go up. They went absurd. Now those wages don't go away. Like if you go from $20 an hour to 30, you're still at 30 over here. So you're not getting more than $30 an hour, but you're back in trend. Historical trend. Let me show it to you. So you're in historical trend right here. Do you see it? So wages are going crazy. Wages are going down. Then they're offering you less money over here, right? But it's still $30. It's not 10 or 20. And so you're now in this bottom of trend. So we're in the start of an inflation cycle. It is important for you out there in your real life to demand more money. Start looking for new jobs that are offering more money. You don't want to see this with inflation running, do you? That would be bad, wouldn't it? And corporations definitely don't want it up here, and they've done their fucking job, haven't they? So inflation's running hot. You need to find work or you need to get a raise. You need to start thinking about that stuff right now because when it really does matter, when I said on Reddit in this post yesterday, you're right like a clock. You're now right like a clock. Now it's time for you to begin asking for higher wages. And you can cite this data. You can bring it to your boss and say, look, wages are up 3.6%. I didn't get it this year. Or I applied for a job and say, hey, wages are up 3.6. Inflation is running high. Starting to slip under the cost of living here for what I was making at my old job. I make $30 an hour. I'm looking for 35 to be inflation proof. I'm not even trying to jump ahead of everybody else that's out there, boss. Oh, and here's the data for it. The guy reads it and says, that guy's right. Holy shit, I got this coming at me. I didn't even know it myself. I haven't even built this into my own company. So that's the real state of our labor right now. So let me ask you this question. Just on labor, is anything bad at the moment? The answer is no. We're actually coming into full employment right now. And what's the second thing that you can take away from this? If you've been crying wolf for a fucking year or 2 or 5, you were wrong. But now it is time for you to be right. It is now time to ask for more money, to look for new work. And you have to find the places that are hiring. You have to go to your boss and bitch. And you couldn't bitch before. Now you can. Look at that beautiful fucking thing. That beautiful double back test of that fucking gnarly trigger, man. And it just runs. That third wave is just fucking never fucking fails, boys. Never fucking fails. Rampo-rama. Yeah, this one right here is kind of iffy. The 50 matters here, and then the drop to the thing. Like we just gotta hit the 50, 742.50, right in here. We can draw this down here too. So the state of labor is good right now. State of labor is good. It's not bad. It's not great. Now, ask yourself this question about just Warsh and policy. Do you think that just knowing just this labor picture, do you think that the Fed or the Treasury Department should be punishing you right now? The answer is no. It's good. It's not bad. It's not out of control. So labor is not where it's at, right? So you want that bear hawk Warsh? Labor doesn't provide the answer for that, does it? We're going to go to the next one. This is household debts, debt to income ratio. I know you've heard that term floating around recently. Debt to income ratios, debt, household debt, serious delinquencies, foreclosures, collections, bankruptcies. Americans and their debts. Student loans that suddenly have to be repaid again fueled overall delinquency rates. How bad, though? I know you've heard that headline, right? It's actually back to the norm. Total household debt outstanding for Q1, mortgages, HELOCs, student loans, auto loans, credit card balances, and other consumer loans such as personal loans and BNPL loans was nearly unchanged compared to the prior quarter at $18.79 trillion, according to the Household Debt and Credit Report from the New York Fed, which obtained this data via its partnership with Equifax. Year over year, household debt rose by 3.2%, or $591 billion. Compared to the prior quarter, HELOC balances jumped, auto loan balances rose. Wait a minute, I thought everybody had bad credit. Auto balances rose, credit card balances fell. What? Mortgage balances edged up, and student loan balances were essentially unchanged. But the number of households has grown over the years, and the income per household has grown on average. That's not true. The number of households has grown over the years, and the income per that household has grown on average. And the total household income has grown faster than the total household debt. Get the fuck out of here. I think we had better times pre-COVID. World was better, at least financially. Or am I just mad that I'm moving up in the world and that I don't want to pay higher prices? Total household income has grown faster than total household debt. And the burden of this debt on that incline or on that income has declined over the years. Get the fuck out of here. The burden of that debt has declined over these years? Bro, it feels like it's worse than it's ever been. The burden of the debt. The debt to income ratio is one of the standard ways of measuring the burden of a debt. With households, an appropriate income measure is disposable income, which shockingly is also released by the Bureau of Economic Analysis. You can literally look up the burden and the amount of disposable income that people have. It's released by the Bureau of Economic Analysis. Go ahead, put your earmuffs on. Some of you definitely don't want to hear this. I'm sure of it. Or that's what I'm told on socials. Disposable income is essentially the monthly after-tax income consumers have available to spend for their costs of living, to service their debts, and to save and invest. It consists of after-tax wages, plus income from interest, dividends, rentals, farm income, small business income, transfer payments from the government. But it excludes capital gains, which is where the wealthy make most of their money. Excluded are thereby income from stock-based compensation plans and capital appreciation, where billionaires make their billions. So you can't even hide now, can you? We're not including any of their money. You know, the hated class. I hate them too, but we're not including any of their wealth. This is for you and I, regular worker. Disposable income is essentially the monthly after-tax income consumers have available to spend for their costs of living, to service their debts, and to save and invest. It consists of after-tax wages, plus income from interest, dividends, rentals, farm income, etc., etc. But it excludes capital gains. The debt to disposable income ratio in Q1 dropped to 79.9 as disposable income rose to a record, while debt balances essentially remained unchanged. This ratio was the lowest in the data going back to 2003. So if I told you that you're better off than you were in 2003 and every fucking year since then, you'd slap me in the face and tell me I was wrong. The data doesn't support your argument. This ratio was the lowest in the data going back to 2003, except for 2 quarters during the stimulus era, when disposable income was bloated out of all proportion by massive government handouts, including the stimulus checks, PPP loans, and numerous other programs. Some of you, I was streaming then, some of you did the right thing, didn't you? Do you remember when the zeitgeist was that you're all partying and you're all at the gambling casinos and stuff with your money? And I said, that's not true. I said, a whole bunch of people are not doing that. They're renovating their homes. They're finally going to college, or they paid off their college, or they started a new business. Mary started the landscaping company, right? Remember that? Whole conversation we had, Mary the landscaper. And then she might run into problems down the road when her equipment gets old, but there's free money. And some people did the right thing with that free money. They didn't go gambling. They didn't buy a fucking Bentley. They didn't commit fraud. They took the money they were given, they invested it in themselves, and they are doing better today overall against the zeitgeist that you're told. Consumers are working and earning record amounts of disposable income, and their aggregate balance sheet is in good shape. Airmuffs bears. 65% own their own homes, and about 40% of them own their homes free and clear. It's actually the largest in history of mortgages. So post-World War II, we have more people that own their homes outright than any other time in history. While another big portion is only a relatively small balance left on their mortgages. Over 60% of households have at least some equities, and their prices have exploded. And they hold precious metals and cryptos and are sitting on $5 trillion in money market funds, plus a pile of CDs. I've told you in the past that they're not putting in savings accounts. People are savvier than they once were. Technology has changed. We don't pick up a fucking savings account book from our local credit union anymore, do we? And people are wealthy. We're supposed to crash and the bubble's crashing, right? Things are bad right now, right? Consumer is horrible right now, right? In other words, the balance sheet of the economic entity of American households is in good shape. And unlike some other economic entities that are massively over-leveraged, such as certain corners of finance, parts of corporate America, and of course the federal government, that's where the leverage and risks are, not with households this time. So if you want to see something implode, what would it be? Fed, company, over leverage, building out the AI bubble, right? But that wasn't always the case. Leading up to the financial crisis, consumers were highly leveraged, and they were piling in debt. And when the debt to disposable income ratio went over 115%, the whole thing began to implode. I've said this to you in the past in the show. I told you years ago, and I've since altered what I've told you slightly, but still the same message. Post GFC, the Senate pretty much put guardrails up for an American. So, like, if you're an American, right, and you live under capitalism, the rules up into the great financial crisis were designed to flush you the fuck out. At the end of each economic cycle. Now, into the great financial crisis, we abused that system. And we over-leveraged everybody. And so when we flushed everybody out that time, it was ugly. And so the Senate came out, and lawmakers and executive, what they did was they put stiffer guardrails on to wash out a consumer. You can't take on this much risk anymore. The effect of that over the decades since 2008 is that we have a more resilient consumer. One of the most resilient consumers of all time. which I know is not part of the zeitgeist, but it's the facts. And so you have a consumer class that is resilient right now. How do you wash them out? Even Trump recently talked about the 30-year mortgage, right? And loosening conditions for borrowers. Now, I don't agree that we should do that. I like the consumer being better well off. But we already know that the government, behind the scenes, they want to flush people out. They want a chance to flush more resilience out of the consumer. And you see these policies being pushed on us. We'll give you a 30-year mortgage, right? You guys can't get a mortgage? That's not true. You guys don't qualify for a mortgage? I'll give you a 30-year, or not a 30, a 50-year mortgage, 100-year mortgage. I said 30, but I meant 50. We'll give you a 50-year and a 100-year mortgage. Who's that going to fuck? You're already fucked if you're in the bottom 15. It's probably there to let someone that's better off be like, I'll just buy this 50-year, 100-year, I'll add it to the family pile for the trust, and hopefully they get rolled. So looser rules for flushing more people out of the system. Can you imagine knowing right now, in the face of being told that the economy is horrible for the consumer, that in fact, the consumer is the most resilient it's ever been. And if anything, companies and the government want to erode that. That's the direct opposite of what you're told right now, isn't it? Defaulted student loans fuel overall delinquency rate. Student loan balances were roughly unchanged in Q1 compared to the prior quarter at 1.66 trillion and up by 1.7% year over year. The policy on that is garbage. But you also have to take into consideration that delinquency rates fell dramatically while Biden was in office and giving people those furloughs or whatever that you want to call it. Now delinquency rates are back in line, so when they rise again, they look worse than they are, even though the system itself is fucking terrible. The 90-plus day student loan delinquency rate rose in Q1 to 10.3%. That's plenty for a bloody, gnarly headline. Back where it had been before the pandemic, though, according to the Fed's report. In 2025, federal student loans that had been covered by the government's forbearance, that's what I was looking for, forbearance policies since 2020 came out of forbearance. During the government's forbearance program, borrowers didn't need to make payments, and their loans weren't counted as delinquent, as if they didn't owe this money. But that ended in 2025, and those federal student loans suddenly showed up in their credit reports again, and delinquency rates exploded. So, if you are reading the headlines on this, it looks horrible. Student loan delinquency rates plus 90 days. This number looks atrocious, doesn't it? But it's just back in line again. You see it? Like some data comes back in line. You see the data back in line again? It's back in line again. Delinquencies went crazy in here, right? They came back down and we're now back in line to the norm. But of course, you read that headline and you think, oh my God, everything is horrible. It's actually just right back into this. Now, I do agree that this whole system is garbage and bullshit. Don't get me wrong on that. It's atrocious. The fact that you can take a loan for your education, even if you pay interest, but between the fees and penalties, you can pay way more than the loan actually was. It should be just straightforward. You loan me 10 grand, I owe you $12,000 whenever I can pay it off, and you can put some pain to me if I don't pay it off. Can't have I think they take away your, if you're like delinquent on your federal loans, you take away your passport. You can do all kinds of stuff to push people into paying. even if it's $1 a week. So just the system itself is garbage. But that does not preclude that the delinquency rate on student loans is just back in line. We're back to the standard quo, not way outside of range. It's not like we're doing this. It's not like we're up here and it's up here now, right? It's coming back in line again. But that doesn't lead in the news. See if we can get a stall, a little bit of a stall in here. The back test should be somewhere around 740.95, 740 if we roll. It's now 1 p.m. We might want to move this over here. We could end up doing here is like stalling. It's that 132 and then the push higher later on. So watch out for VIX fuckery at 1:30 and 2 p.m. I'll keep this here. I'll keep this here. We'll just keep sliding it over. Just be aware of expiration, the sweep and all that for the end of the day or middle of the day. The overall 90-day delinquency rate got whacked by student loans and rose to 3.36, the highest since before the free money pandemic. This is the amount of the total debt, 19 trillion, excuse me, that was 90 days delinquent at the end of Q1, amounting to 631 billion delinquency rate. While the 90-day delinquency rate for student loans was 10.3%, it was 0.95% for HELOCs and 1.09% for mortgages. All of the delinquency rates are coming out of the pandemic free money trough and are reverting to the levels of pre-pandemic years. Foreclosures edged up further from the near zero levels during the era of mortgage forbearance when foreclosures were essentially impossible. The number of consumers with foreclosures in Q1 of 59,160 was still below the low end of the good times, 2018 and 2019, and far below the number of foreclosures in prior years. Let me show you that data. So if you're reading bad foreclosure data, let me show you the actual data on foreclosures. Check this out. This is the good money times. Look at how high the foreclosure rate is. I know you don't want to see that. Number of foreclosures, right? You want to see that. You want to see those people. Remember, these people own 40% own their homes outright. 60% almost own their homes outright. The other 40% have equity in their homes right now. And look at where we are. We're in this is called a frying pan. This is the good times, baby. Times are bad, though, right now, aren't they? Things are bad right now. Foreclosures are up right now. Woo! They are up. Check it out. They're up. Yep, they're up. They're way up, man. How about relative to any other time in modern history? No. And you can see where policy made this possible. See that? Resilient consumer. Does that print headlines, though? No, it doesn't, does it? Third-party collections. I've heard that news come out. Third-party collections bounced off rock bottom. The percentage of consumers with third-party collection entries on their credit reports rose to 5%, but after hitting rock bottom. In 2013, as a result of the Great Recession and the unemployment crisis, ready for this? Over 14% of consumers had the third-party collections entries on their credit reports. We're at 5%. And we just came off rock bottom on the average. A third-party collection entry is made into a consumer's credit history when the lender reports to the credit bureaus, such as Equifax, that it has sold the delinquent loan data, or delinquent loans, such as credit card debt to collection agencies for cents on the dollar. The New York Fed obtained this third-party collections data in anonymized form through its partnership with Equifax. Let me show you that. Now, this would be like what? If things were really fucking bad, nobody's got credit, right? They're past their delinquencies, and now they're being, what, sent off for a third-party collection agency when you get a phone call, and it's like they just call you and call you and call you, and you're like, hey, is this the hospital? No, it's a Johnson and Johnson and Johnson. Let's see what that is. Whoa. Wow. That's not indicative of... I bet the headline in this pop-up, though, is making huge news. Huge. Does that look like a consumer that's in the throes of economic despair? Does that match what Reddit has to say? Can you imagine what Reddit would be on fire in 2008, wouldn't it? My eyes! I can't read that, Cappy. I've been told we're going to crash, man. The whole economy's coming down, bro. I mean, it's rising, but we got some room in there, don't we? There's like an econ nerd as we go up today. He's like, just keep pumping that fucking econ news, bro. So this market just keeps going up, dude. Take me to Valhalla to fucking 748, bro. I got another shocker for you in the state of the consumer. How about bankruptcies? That's the one that's scary, right? Forget the third-party collections. How about bankruptcies? Number of consumers with bankruptcies. You ready for this one? How about that right there? Number of consumers with bankruptcies in thousands. Look at this. 2004, cranking. Woohoo! 2000, 2007, 8. Bam, all the way down to no, right? Cha-ching down here. Whoa, 2010, baby. Bankruptcies. All-time lows right now in modern history. All-time lows. Well, the bankruptcies are up, bro. Market's going to crash, bro. But they're not showing you this, are they? People don't have any savings. They're on the knife's edge right now. Well, they're putting their money in crypto, man. That data set you're looking at is a savings account. Nobody keeps money in a savings account anymore. If they do, they forget about it. Well, I do. You might, but most people don't. Now, we know that the labor stats are good, right? They're not great. They're not bad. They're not overheated. They don't need to be controlled. If you're to look at the state of the consumer, and are they bitching right now? Yes. They're bitching because of politics. They're bitching because they're moving up in the world, but the groups above them are moving up even higher. There's a lot of jealousy. We also know that the bottom 15% is worse off than they've ever been. They're really hurt right now. but the masses are not. And what are we talking about right now? Tariffs. Not natural inflation. We're talking about tariffs, Strait of Hormuz, right? Because I'm going to show you some of that data, and that shit doesn't align with what you're saying. And if you think about the consumer right now, can the consumer handle bigger gas prices? Let me ask you that question after showing you that data on the consumer. Can the consumer handle higher gas prices? The data says yes, doesn't it? The labor market's in decent shape, and the consumer is well off. So you're seeing gas prices moon, you're seeing tariffs over there and over here, and you're saying, were they going to break, bro? Labor market disagrees with that. State of the consumer disagrees with that. And who's over leveraged right now? Corporations, federal government. Those are the ones at risk. And who are the ones that are gouging you right now? Federal government, corporations. So they're actually in the chase for money, not you. Make sense? And now we're coming into natural inflation. Cyclical, insidious. And times are changing. And there's potential for times to change. The gasoline price spike hit CPI inflation for the second month, but electricity prices also spiked. Core services inflation spiked. You need to be afraid of electricity inflation, and you need to be afraid somewhat in services inflation. Services are where, like, the greed is. Like, if you get, like, a tariff announcement, we're going to do a tariff, right? You'll consume an article that'll tell you, like, oh my God, dude, prices are going to go up. The input cost of the goods into that beer that you drink are going to go to the moon, bro. And so you get fed this, right? Who's doing the feeding? Do you know who it is? It's not the fucking guy that's making something. It's the services company. They want to raise their prices to match. They want tariffs to increase the price of the goods that you're buying so they can raise their prices. It's greed. They'll be forced into it eventually if goods prices go up due to tariffs, but they don't care. They just want to match it right now. They want you thinking that inflation is raging. What actually happened when tariffs came out was a lot of companies were making the same profit from the free money era from COVID. And so when we had tariffs, what they did was they ate the tariff. Go ahead, put your earmuffs on and say that didn't happen because I'm going to disprove you again. What truly happened was the producer ate that. They were already fucking profit rich. And we had profits go down in 22, didn't we? And in 23. And in 24 and 25. The only companies or the only industries that didn't give up that profit, I think, were healthcare and financial services. All these other companies came back in line from the free money era. And through taxation, through tightening, and then tariffs, they, instead of passing along the cost of tariffs to you, they ate the cost of tariffs. And the cost of tariffs, if they didn't eat it, were amplified for your consumption. So if I make a product and I make a pencil and the paint comes from a tariff nation, I charge $1 for this pencil. What I'm paying for the paint is 5 cents, let's say. Let's say it's 5 cents. The tariff on the paint is an tariff 20%. That means that I went from paying 5 cents to 5.02 cents. I can eat that. You're told if that happens, it's going to go from from a dollar pencil to $2. Some companies did that, and they went bankrupt. They couldn't take that. They couldn't take that hit. Other companies ate it and they stayed alive. Other companies started a new pencil company and replaced that pencil company during tariffs. The one thing that a company doesn't want to do is any work. So if I have a pencil company, I'm going to try to pass that along to you if I can. I'm going to try to even increase my profit. Oh, it's now $2 because of tariffs. And through natural selection, I might get replaced by another pencil company at some point. Some companies are just going to charge or eat that upcharge, and they're fine. They're doing fine. They didn't pass that along to you. But meanwhile, services is where the greed comes in, and they start jacking their prices. They actually artificially raise inflation. And during that process. So you're all pointing your fingers at companies making shit. In reality, it's the services that are driving the inflation. So the company doesn't want to change anything, but the company can change things. The company can say, well, you know what I'm going to do? I'm going to find a different paint company in a different country. So some companies actually go and find a paint maker for the 5 cents I was paying. They may choose to increase their price. They may choose not to. And meanwhile, you still have people screaming everywhere. Bloody murder. Like your consumer that is actually better off for most of them. The ones that aren't are screaming louder, right? So you even have companies out there performing the same action. Where they're like, oh, we got tariffs. I got to raise prices, bro. Then all of a sudden, everyone else is sucked up into that inflationary tariff. Now we're coming into this again. Is the reason I'm bringing this up. Because we're in Strait of Hormuz now. And we also have natural inflation that's beginning to show in services. So the gasoline price spike hit CPI inflation for the second month, but electricity prices also spiked. And there's another insidious inflation, which is electricity. You and I, you want to get mad at somebody? Like you got mad at Trump for tariffs? You want to get fucking pissed? You're barking up the wrong tree. You want to get mad at somebody? You should be getting fucking livid at energy companies, and more specifically, electric companies. They are cranking alongside natural cyclical inflation. They are insidious. Wherever you live right now, right? Think about gas. It goes up and down, up and down, up and down. Electric does not. It goes up and up and up and up and up and up. And you and I are literally paying for the build out of AI. We are paying for the energy build out for AI. Now, if you're a bear and you want to get pissed, you're a consumer and you want to get pissed right now, you should be raging that you are footing that bill. When your energy company tells you that they're not doing this to you, I will show you the evidence that they are. And it's permanent. So if you don't own your energy company in your state, you should. If you don't own the energy company in your state, you should start thinking about some solar, even if you're installing it illegally. If you look up right now in the U.S., if you go to Google and you type in how many people are installing illegal solar, it's rampant right now. Rampant. People are deciding upon, do I get permits? And do I work within the system that my state allows for feeding energy back in? Or do I just buy my own used solar panels, my own shit, I install it all? Maybe I'm not making money back by feeding it back into the system. Plug and play, you can still do that. Maybe I'm not feeding it back, but I'm still going to save more money from the outrageous inflation being charged by my energy company. It's literally coming to a point right now where it is way better for you, even if you do it illegally and pull it off when you sell your house. Literally. It's like the cost benefit of you just putting anything in. Like plug a fucking solar panel in on a fucking roof with a cord to one of your circuits. Plug another one into a different circuit. Have you heard of plug and play solar? If you have not, you should look into it. Even if you have 1, 2, 3 panels, 6 panels spread around your house somewhere outside and you got them plugged in, back feeding, still better than you paying full price for electricity. And it shows no signs of stopping, and it's going to become outrageous at some point. And there are other problems here. So remember all the bitching about inflation, right? Now it's actually matters. Gasoline price spike hits CPI inflation for second month, but electricity prices also spiked. Core services inflation spiked. It's the biggie, accounting for over 60% of CPI, services fucking inflation. And food prices jumped too. So it's a mess. And even if the Fed wants to look through the impact of the gasoline price spike, it's going to smack into surging core services inflation, accelerating food inflation, and surging electricity inflation driven by the AI bubble. The all-items CPI spiked seasonally adjusted by 6.64% in April from March, or by 8% annualized. On top of the majestic spike in the prior month, not seasonally adjusted, it was even worse. So last month's and this month's inflation are finally running truly hot. That is now cause for concern for you out there. Year over year, the all items CPI jumped by 3.81%. Where are wages? 3.6, right? So we got some trouble on the horizon now. So the clock being right once is now right. And I want you to answer me what happens when we're in this situation. Because normally what happens is there's a mad fucking rush. This market should go fucking vertical until we tighten. Vertical. Or the bond market freaks the fuck out. And right now we have a new Fed chair coming in. Is the bond market going to give him a chance? And he wants to do what? Pay down the debt with cheaper money. Inflation. Negative real rates. The year-over-year CPI rising by 3.8% is now blown by the Federal Reserve's policy interest rates of 3.5 to 3.75. Let me read this to you. Thereby turning the Fed's policy rates negative in real terms. That's right. Negative in real terms adjusted for CPI. Listen to this closely. This situation of short-term borrowing costs are below the rate of inflation is stimulative of inflation and of the economy. So where labor was fine and the consumer is fine, we're now moving into what? An expansion of our economy. These fucking clowns out there are telling you that we're going to crash. Yeah. And right now, we're in an expanded economy. The bubble's going to pop for all these reasons they're giving you that are bullshit. And they fail to tell you that we're going to crash in an economy that's expanding, with a consumer that's resilient, in a labor market that's good. That's what they're telling you right now. They're telling you that right now. Does that fucking make any sense to you out there? Go look at yourself in a mirror and tell yourself, the labor market is good, the consumer is great, and we're in an expanding economy. And we're spending like what? Spend, right? Print money. And the Fed's rate is not restrictive. What's the market doing? It's fucking rampant, isn't it? Ask your fucking bear that question. Your bear furrer out there saying to him, say, hey man, the labor is good. The consumer is good. I got the data. The economy is in expansion right now. We got QE and fucking, the real rates are underneath the fucking inflation rate. How are we crashing? Seriously. Where? What? How? What is it? Tell me. Like, where? Now, there is a fly in this ointment. Not quite a fly, but we're going to get into this whole wash thing now soon. This situation of short-term borrowing costs below the rate of inflation is stimulative of inflation and of the economy. The bond market should freak the fuck out. This is quote. The bond market should freak out if the Fed sits in its hands and watches it play out. So we got to worry about the bond market, don't we? And we got to worry about the bond market is doing watching Warsh in whatever Warsh does. Now, the bond markets or the Fed tends to be late, don't they? Warsh wants to fight inflation, or not inflation, debt with inflation, right? And at some point, the bond boys are going to be pissed, aren't they? Maybe not right away, but down the road. And they might give a little bit of rope to Warsh, huh? So if Warsh tries to play this out with no hawk immediately, I'm going to play the shell game with money, pay down debt, make money cheaper. Hey, bond boys, I'm going to pay down debt really quick. I'm going to let it run hot. So all of you are out there thinking Warsh is going to come in here and fucking slam a hammer down. And in reality, Warsh is saying, I'm not going to do that. So let's just posit here that Warsh lets the fucking market run hot for the summer. And then if he's going to throw something down, it's probably going to be in seasonal weakness. And everybody's happy. The package is wrapped up and all the bullshit volatility is out the fucking door by winter, isn't it? He lets it runs hot. The bond market watches him to see if they're paying down the debt. If he's successful paying down the debt that way, comes into seasonal weakness, slaps you with a hike. We're already going down anyways. We take the trip down. Bond boys are now happy. All of a sudden, the fucking bubble is continuing, isn't it? Is this all clicking for you now? So you get no cuts from Warsh in the next two meetings. That's June, July. Start looking at September, right? Markets rolling over and down. Warsh's talk is fucking hawkish as fuck the next two meetings. You get to your third meeting, and finally you get the fucking rate hike. Market's already heading down. Everybody's positioned for it. Nobody gets hurt. We're already fucking inflated. There's no real fucking money lost from the stock market, is it? All of a sudden, the fucking bond boys are happy. Warsh is doing what he promised to do. Market's higher. Meanwhile, you're back here fearful as fuck. Fearful as fuck. We're going to crash. Market's going to crash. Bubble's going to implode. Market's fucking cranking up, cranking up, cranking up. You're not chasing inflation. You're being left behind. You're looking like the fucking clown. You're putting the makeup on. So the bond market is probably the risk. 10s and 30s, 10s and 20s, depending on what you like. You want to be watching those. You want to be watching Warsh. And not fucking walking around saying Warsh is going to be the hawk. You have to be open to different outcomes from what Warsh does and how he acts throughout this process as inflation grows. The CPI for core services, which excludes energy utilities, such as electricity, jumped by 0.5% to 6.2 annualized in April from March, the worst spike since March of 2024. It was driven by hot inflation in housing, rent, and the owner's equivalent of rent. Lodging away from home, including hotels, motels, and airline fares. There's a bunch of information here, right? Inflation is raging in these places. Maybe you want to slim down on those things. So this even helps you in your own life, right? Electricity is going high. It's never going to stop. You likely need to do something in your life to blunt that. You're also coming into higher inflation in gas, but it's likely going to come down at some point with the Strait of Hormuz reopening. But the baddies are rent. Rent is raging in some places in the U.S. It's even diverging from the price of homes, buying and selling. There's like a big divergence right now, but it's not everywhere. There are communities around the world, around the country, that are actually coming down. So you have to identify those places, or you have to negotiate your rents. So now you're combating inflation in your own life. Combating it, doing a plug and play solar panel. You're fighting for a new job. You're asking for raises. You're maybe looking for a new place to live if you're a renter. And you're being forced into this, or life is going to get even worse for you. Maybe you slow down on rentals away from home, or you choose something cheaper. Maybe you look for discounts in airline fares. Hey, they popped up an extra sale here. I think Delta just put out a big fare sale. Cheap shit all over the world. I just bought some tickets from them. Dirt cheap. So maybe now you're looking for bargains. The core CPI, which excludes the spike in energy prices and food, jumped by 0.38% in April from March, 4.6% annualized, the worst increase since January of 2025. Year over year, it accelerated plus 2.8%. The second month in a row of acceleration, the worst reading since September. Now, this is in food and energy. Energy we can look through. Food tied into energy as well. So we're kind of fucked there right now for the moment. But it's not permanent. The CPI for rent of primary residences spiked by 0.54% in April from March, a 6.7% annualized return. The spike corrected for part of the distortions in September and October of November of last year. So this month-to-month spike in April does not reflect a spike in actual rents, but a methodical correction of the distortions in September and October, November. Actual rent inflation has calmed down quite a bit, with a widening gap between multifamily rentals and single-family rentals. As a matter of fact, multifamily rentals are bottoming right now. They're crashing. So maybe you need to downsize to a multifamily rental. Year over year, the CPI for rent rose 3.3%, the biggest increase since December. The CPI for rent of primary residences weighed 7.7% in all-time CPI. Let me just show you this really quick. If you're a renter out there, and rents right now are ramping on like single-family homes, they're ramping. But you have to have context here. So this is rent. The blue line is the month-to-month stuff, right? And then this is your annualized line right here. But what can we see here? What's important here? This spike right here is telling you already to what? If you're going to start fucking renting, you better get it done now, because what's going to happen? Rents are going to go to the fucking moon, aren't they? Theoretically, they're going to go up. So if you're going to move, when is the time to do it? Is it right fucking here, or is it right fucking here? Right here, right? Right where we are right now. Rents are on the move to the upside in a big way. So CPI of rent of primary residence changes are starting to move. Think about that and how we're moving into this next phase. Well, I'm going to take risk off the market. I'm going to hide all my money, and then I'm going to give it all away to inflation. Fuck no. So if you're going to move and you're a renter, you have to do it now. If not, you better be signing a lease wherever you are. Hey, can I get a 2 years lease? Can I get a 3-year lease? I really like living here with you. You're not going to tell them inflation's going higher. You're going to say to them what? Protect yourself and say, hey, I rent this place. I really like you as a landlord. Is there any way for me to extend my lease? I like the security of living here, but wait, you're going to sell the house in a few years? Oh, no, you like long-term tenants? Can I sign a lease with you with like a 3 or 5% increase for the next 3 years, and I'll walk it in right now? And boom, I'm in. Or I need to move somewhere even cheaper, save an extra $1,000. So we're in this new phase of the economy, and you need to prepare for that. I'm not going to talk too much about airlines here because you already know why they're going up. It's fuel related. But I want to point out one part of energy that you need to pay attention to. And this is energy inflation, right? Between gas and electricity. Gasoline prices after a huge spike tend to fall back at least partially. There's some of that spike that you'll never recover unless there's like drastic change. Like with what happened at Strait of Hormuz, some of the price spike will never go away because it'll price in a premium of the strait closing again in the future, even if it reopens. The only way that you would not have that permanent price in on gasoline, so it'll likely never see below $2 ever again or something like that, right? You have a new floor that's higher, but it does still come down. Now, electricity is a little bit funkier than that. And what do we consume right now? What do we consume? We're on Reddit. We're on Twitter. We're on, I don't know, where the fuck you're on. Truth Social, I don't care. What does everybody pump you with? Oh, dude, propane kills you. Natural gas kills you. Everybody's going electric right now. I love my new electrical. I hate cooking on gas. Bro, I also switched from my my natural gas furnace to electric, bro. Oh, I got the fucking double this fucking. I get air conditioners sticking out of every fucking room in my house. Looks great, right? Everything's electric now. Oh, and by the way, you should be buying electric cars too, right? Buy yourself an electric car, right? You're being told, right? Yeah, we gotta do that, dude. It's good for the future. Well, where are they gonna fuck you? Electric. Not gas. Not coal. Not oil. Not wood. We're banning wood stoves in your community. So they got you by the fucking balls, don't they? And they got you by the fucking balls with what? Electricity. And not only they get you by the fucking balls for electricity, they're also building out AI. They're riding you. They're actually riding you behind the scenes closely. And they got you by the fucking balls, don't they? Because you're all adopting this, right? You're adopting AI, you're adopting electric in your entire life, home, car, everything. Now, I don't think that's bad, but you have to come up with a way to counter that. You either have to like say, fuck that, I'm going to stick with gas for everything that I can, right? Or you got to say, I'm going to get some fucking panels. Well, my community doesn't allow the back feeding in. It does not cost effective for me. That's where I live. DTE won't take your money. They will, but not all of it. They actually try to fuck you. So they make it so that it's not financially viable for you to put electric in with a permit. In my state where I live, I'm getting jacked up in my energy rates, jacked up, and I can't make any money off of a legit system. So where I live, people are putting them in everywhere illegally. They don't care because the cost benefit is still greater than being under the thumb of this. So it's not like you got to be like, hey, you're telling me I can't try to save the world? I got to be like a conservative and drill, baby? No. You just have to find another way to offset and know that you're under the fucking yoke now. Now that you don't have a mix of fuels, you don't have an oil heater and a natural gas stove and a natural gas water heater, and then you've got electricity for your lights and all the shit around your house. You've now got only one choice for energy, and they've got you by the fucking balls. So they're going to fucking take all your money. We're now moving into inflationary period. So this is classic, right? They're going to take all your money, and then the government's going to come for it, and then they're going to tighten. So we're moving out of the expansion phase into the inflationary phase. So everybody wants your money, and right now they got you under the balls. And I want to show you the difference here. The CPI for gas spiked 5.4% in April and March, seasonally adjusted, and by 11% not seasonally adjusted. Year over year, it spiked by 28%. In terms of price level, prices are now approaching the peak of the prior bout of inflation in mid-2022, but we're still not there yet. So if you're looking, and you also have to account for these prices coming down in gasoline. So Is the news bad right now for gas? Yes. Is it at the doom level yet? The answer is no. This is the prior spike, and we're getting there. We're not quite there yet, but we are getting there. We need the Strait of Hormuz to open. This could become a problem. But we also know that eventually this usually comes down. You see how it goes up, down, and it actually goes down into very low levels over here, right? The average is actually down here. This is not what an electricity chart looks like in any way, shape, or form. There's actually more danger from electricity and not from gas. Even though this looks really bad, it may not be as bad as you think when you start looking at the real bad shit. The things that are going to be a problem one day. And that's the CPI for electricity. It spiked by 2.1% in April from March, and after a 0.82% jump in March from February. Year over year, it jumped 6.1%. How many people do you see bitching about Strait of Hormuz and not about electricity for the build out of AI? You should be outraged. I mean outraged by having to foot that bill and not owning it. How in the fuck do you and I not own our electric company? How? If your electric company is in any way private, even if it's a public-private partnership, you are getting raked right now. The only way that you can combat this is that your electric company in your state, you own it. And even if you do own it, prices are expected to continue to go higher. So if you can't fight it that way, or if you can't do it locally, if you're like, Cap, there's no fucking way that's going to work. Okay. You guys aren't that much pain yet till you freak the fuck out? Well, start getting yourself some electric panels. You can actually get plug-and-play ones. Like literally, you put a fucking panel or 6 up, and you literally plug it into a plug. You have an electrician come, put a plug outside in your garage, enough amps on the circuit that you want it on, and it'll fucking make energy and reduce your bills. You got to do something to reduce those bills. And I'm warning you now, because it's going to get ugly. And you think that Strait of Hormuz is bad. Let me explain this to you in a better way. The price that households pay for electricity on their monthly bills, the fixed fees and charges, and the price per kilowatt hour used is largely set by utilities that are monopolies. Some of the utilities are owned by public entities, such as a municipality. Some are owned by their ratepayers, such as co-ops. Others are investor-owned regulated monopolies, and investors come first. Hello, DTE. The only competition these electric utilities face is rooftop and solar power. Plug and play. Data centers are rapidly increasing demand for electricity and data, but it takes a long time to build power plants. And regulator-approved prices or price surges are the consequences. Wherever you live right now, have you noticed that your local utility asks for a price increase and you all show up and say, fuck no, and they do it anyways? Regulator-approved price surges are the consequences. Electricity prices generally don't fall back. And price increases are permanent, unlike gas, unlike oil. Permanent, to be followed by more price increases. The Fed cannot look through that type of AI-caused energy inflation. The CPI for electricity weighs 2.5% in all items CPI. That is fucking huge. Let me show you this. This is insane. This doesn't look like energy, does it? Look at this. It's always going up. And now it's raging to the upside. This is 2021. It is going fucking bananas. How do you fight that? You think the Fed's going to do it for you? They never come down. Any of you that are old right now, do you remember when they built electric everything in homes in like the 70s and then people started ripping them out? I remember. Young people don't, but I remember. That's literally what took place. They had people by the balls on electricity during the gas shortages. And then once they had people by the balls, they started raising the rates. Gas eventually came down. And the consumer panicked. solar wasn't huge then, and people freaked out and switched back to these other energy sources. Right now, we're all kind of fucked, aren't we? Gas is high, electric's high. What do? The only thing we can do is either pay it, and the consumer is well off enough to pay it. These corporations know you're well enough to do it. I just explained to you how well off the consumer was. I just explained to you how well off their employment is. And you're on social screaming about it. You're mad, but you have the ability to pay it. They're asking you for it. They're forcing you into it. How do you combat it? Bitch and whine on Reddit? Fuck no. You go out there and get yourself a fucking solar panel or two. You say, fuck them all. I'm going to do it myself. This is how you get up in life. This is how you become. Like, how do those people do this? How do people do better in life? Why are the Joneses doing better than me? Because they pay attention to this stuff. They say, you know what? Maybe I'm not going to change this shit. Okay, I'm going to go out there and, I don't know, maybe I'm going to rip out the electric stove and put in natty gas this. Or maybe I'm going to go out and get panels. Maybe I'm going to go out and find an oil burner. Maybe I'm going to put a fucking wood stove in my house until prices come down. They're not going to. Electric doesn't come down. And it's raging right now. The CPI for food at home jumped 6.6% in April from March, the biggest month-to-month increase since August 2023 after a small dip in the prior month. Year-over-year, food inflation rose by 2.9%, also the worst increase since August 2023. There has been an acceleration in the price of food. It's now beginning to become a problem. It actually wasn't a problem, but I want you to look at it here. This is trend right here, right? This is the actual natural trend, and we're coming back into it right now, aren't we? But it's starting to pick up, isn't it? You see it starting to reach up, right? And these month-to-month squiggles are also warning you. Higher low, higher low, higher low, higher high, higher high, higher high, higher high. Food inflation is going to ramp. It's expected to ramp. This one's a bad one, too. Think about that. Your food prices, what you think they're bad right now, you read Reddit and you go, oh my God, they're awful. How about you want more awful? Yeah. So if you want more awful or you don't want more awful, you think Warsh is going to save you? Probably not. He's going to pay down the debt. So you have to prepare for this. What are you going to do with your stock money? You're going to take it all out and piss it all away on this? I wouldn't want to do that. You got to chase and make more money, don't you, to pay all these big bills? The food prices are going crazy. Electricity prices are going crazy. Where else am I going to put my money to outrun inflation until we tighten? Where? Housing market's not moving. Where are you going to put your money right now? Bond market's in fucking shambles. Inflation's ramping. We don't have tightening right now. Where is the place that all the money runs into? Where does the herd go? Right over there. Stock market. Until we go into a true tightening cycle where the rates are higher than inflation, that's where the money is, right there. That's why we're trading $742 right now. Now, here's the last nail in the coffin. I got the last one for you here. This one's going to kill you. You know how you're hearing things about like tariffs are fucking the consumer, right? I should prove to you that's not the case, right? You think that durable goods manufacturers are bending you over right now, or they're greedy? It's not. It's the fucking services. It's the greed. Here's durable goods inflation. Where's tariffs in here? I see a bump here and then down. You know what this reminds me of? It reminds me of like Epstein. You're pointing your finger at the wrong fucking place when you should be looking over there. And when you're not looking over there, they're doing the thing. So they're doing the thing in the electricity, and they're telling you to pay attention to tariffs and the greed from manufactured goods. So you're looking at that, and you're not looking at this. And they're doing what they want to do. They're building out AI, whether you like it or not. And the reason why I bring most of this up for you is because if I've told you this stuff today and it doesn't jive with what you think, it's because you're lied to consistently and very well. And like the rat race, you'll be left behind. It was very similar. Like you're looking at the wrong things and you should be looking at other things. And then when you should be concerned, you are not concerned. When you think, oh my God, it's the worst it's ever been, but it can get worse. It may get worse. Right now we're on that track, and that track is not tariffs. That track is not the consumer. It is not the jobs. And if those are in your favor, you should be working with that in your favor, because we are coming into some dangerous times. And I don't think they're dangerous at the moment, but when they do, you don't want to be left behind in this chase up. You definitely want to be prepared for when it is time to protect your money. If you look at those jobs, you should be getting a job. If you're unemployed, if you're watching my show, you're unemployed and you like, I need a job or something, like you got to do it like right now. We still haven't hit that one. That still hasn't hit. I want to hit this one right here. I want to hit that. So we're at a transitioning point. We've got Trump meeting Xi in China to try to bring a resolution to Strait of Hormuz. It is in their benefit, both Trump and Xi, more so in Xi's benefit. Xi relies upon the strait more than the U.S. does. You are also wanting to consider right now that we're heading into an inflationary environment. We're coming from, flat frying pan. Like we're part of the economy where, we're in the soft landing, but then the soft landing starts to become inflationary where it's a problem. And it's not a problem yet, but it's going to become a problem. And in this last mad dash of this inflationary period, you should see inflation rise and the government, your government, let it run hot. Now, we have to identify how long this lasts, and we have to identify what's going to happen in the stock market. It's probably a time of expansion in the stock market until they really, truly tighten. Until Warsh comes out and says, no more QE, we're in a regime of QT, and we're going to raise the rates higher than the rate of inflation. When you see that, you know what? Whether he does it without telling you, maybe you can attempt to time it. And when he actually does that, then we got to be concerned. Because then we have to do what? Protection, right? Take all your money out of the stock market, you load it up in the bond market, you put it into short-term notes, you try to make money, right? You do ladder investments in bonds. Ladder every fucking 3 months. But we're not there yet, are we? Everything is good right now. Employment is good. Consumer is good. And now I know that it's good too because inflation is raging, right? They're coming for your money before the government does. So corporations are greedy right now. And there's money sloshing around and you have it. And corporations want it. And eventually the government's going to come for it from you and companies. It's not today. So you got to run this rat race until it does happen. So be aware of that as we move forward. If you like thinking about like top is in, the bubble's in, I might say to you, maybe not so much. And even then, you get the expansion, and then you do get the QT, and you do get the hawkishness from the Fed. You get the bond market boys pissed off, and they've paid down their debt, and they start getting serious about all this debt shit and deficits, and the midterms are over, and Trump's going, see ya. You want to be aware of when that is. So be careful of what people are telling you right now about the state of everything. State is in expansion, an accelerated expansion. So these moves higher could be fast, hard, and to the upside. It should be similar to like 2021. And what do we do in 2021? Vertical, right? We went into the heat of inflation. What do? We went up. We had moments of pullbacks. We went vertical. What are we doing today? Going vertical, aren't we? Top was in yesterday. We're going vertical, though, today, aren't we? Or 2 days ago. Top was in on Monday. We just swept the Friday, Thursday lows, didn't we? And then we started moving higher again. This is indicative of the phase that we're in right now, or coming into, of rampant inflation. And it's everywhere. I'm just bitter because my shitty electric. Actually, I have solar now. I have some solar. I do have some solar. Actually, I have some solar. I'll tell you, I don't tell you guys everything. I have some solar. And I built a metal roof for solar panels on the top of my roof. And then I built a garage and I built a, what do you call it? It's like 30 by 20 foot wide pergola to put solar on top of. And I'm accumulating solar panels right now. So I think I should be off electric grid end of year in full. So yes, I'm even doing that. I think I'll be fully self-sufficient within a year. Somewhere in there. I'm going to take a quick break now. It's 2 p.m. in the afternoon. You know where I think we're going, right? I already drew the line for you. It's way up there. It's either now or Thursday. We could pin it and then trade sideways and down into 740 from there. Trading 742.63 right now. Looking to get up there and trade 744.50. To the upside. Reading some of your comments right now. Like, oh God, he's on a diatribe right now. I like to get this stuff out there because I think when you're not watching this show, I think like we're all like shiny metal object, right? Ooh, look at that, more doom over there. And I don't think that I think we need some perspective every once in a while as to what the current situation really is versus, and it's also a nice segue into this new economic environment. We are definitely, without a doubt, mark my words, we are leaving the soft landing and we're moving into the inflationary part of this cycle. And it's usually ramp, and then we hit that wall. So just be aware of it, okay? I think that's what I want to leave you with this. New phase of the economy. We're in the ramp phase. and it's going to get messy. Some people are going to be left behind, and then when the fallout from it's going to be gnarly. The crash should be fucking epic. Like, not the Mike Burry bullshit, and not Charles McGilligot thing, like 20% down or something. I'm talking like, you know, when the bubble bursts, it's going to be fucking a mess. You don't want to be left behind in that. You want to do as much as you can to get as ahead of it as you can. So when it does happen, who are you? You are the guy with a bucket load of cash, and pencils, once again, are worth something. Right? So accumulating pencils, and all of a sudden, everyone wants pencils and you got them. And that's where you come up with like the Buffett's got cash, and you do too. Just want to see us get over this. I want to see this here. I want to see at least I want to see like the bang down, and then then the above. I'll be right back. Sorry I have to go through this today. I just want to get it out there because when I talk about things with you and you guys bring things up to me, and I'm like, these guys are not on the same page as I am. Like, they're bringing up shit that it's like is not true. So I want you to be on the same page and be like, hey, yeah, he knows what he's talking about, and that guy over there doesn't know what he's talking about. And I think I showed you that wolf thing earlier. Like, can you imagine like you're operating on a premise that's false, and then you like bring it up to somebody that reads that data and they go, bro, you don't like, that's not real, man. You really want to know that stuff. It really makes a difference in your life. It's made a difference in my life. I've had a better life because of that stuff. Like when to buy this, when not to buy that, when to shift my money to here and there and that kind of stuff. That shit makes a difference. It should make a difference for you too.
Kashkari says the Fed chair has a lot of influence.
I'll be right back.
Kashkari clarifies that the Fed chair is one of 12 voters on Fed policy.
Oh, I wrote M-O-A-R-E. More. I don't need the E in there. Just M-O-A-R, more.
Goes in the red, and then the deficit takes off.
Just a note that this is Neil Kashkari talking right now.
Leaders have to come together and decide, do they want to raise taxes? Do they want to cut benefits? Do they want to embrace more immigration? Those are the three levers that you can balance this. It will have to be balanced over time. It will have to be normalized, but it's not the Fed's role. The last thing I'll just say is, what is the danger zone? We're at 100% of debt to GDP. Many countries have gotten into trouble at this level or less, but some countries have gone way beyond it. Japan has twice as much debt to GDP and has been able to fund itself just fine. And so what's the danger zone? I don't know. And nobody knows for sure. And right now, the US is by far the most competitive economy in the world. I don't see that changing in the immediate future, but could it change over time? It could change over time.
We have time for about 2 more questions. Thank you for being here today. I'm also a community banker here, lend to small businesses and investors alike. Question I have would be, what advice would you give to business owners or folks like myself that interact with business owners to see through the noise when it comes to inflation? I think there's a lot of gamesmanship that can happen with a lot of the information that's put out publicly. I think that happens on both sides of the aisle. So again, what advice would you give to those of us that want to be able to speak with clarity and just actual understanding?
I mean, I would say on inflation, what I feel most confident in is that we are dead serious about getting inflation back down to our 2% target. We take this as seriously as we take anything. What's been hard is that the economy keeps getting hit with these, what we call supply shocks, which push up inflation. It's like a big wave hitting us, and we're trying to get ahead of the wave, and another wave is hitting us. Hopefully there are no more waves to come, and then the Strait of Hormuz can get reopened, and we can get on our way back down to our 2% inflation target. But it might be that there are other waves to come that we just cannot foresee. And so, I mean, one of the challenges all businesses face is how do you make decisions in the face of this kind of uncertainty? It's really hard. And so know that we're committed to getting inflation back down to our 2% target in a reasonable period of time, but also plan for a wide range of outcomes. If the global economy is just more vulnerable to these shocks, as we call them, then we all just need to be prepared for that.
And the artificial shocks. You talked about starting the year with a certain sense of certainty, that's changed artificially and certainly unexpectedly.
I mean, I'll let others opine on that. I mean, COVID was certainly unexpected. You know,
Right.
we do scenario planning all the time for what are things that can go wrong, what might hit us. I can tell you COVID was not on our map of risks that might hit the economy, nor was massive supply chain disruptions coming from COVID, nor was the Iran war, nor was Russia-Ukraine. I mean, there's a bunch of stuff that is happening that we're just having to react to.
Do we have one final question up here? Please.
How do you think AI and automation will reshape the labor market, and how is the Fed preparing for that?
You know, this is another example of something we're studying a lot, but I don't have a lot of confidence in knowing how it's all going to look 5 years from now or 10 years from now. I do think AI is real. I think that businesses I talk to every day are finding new use cases, either doing more with less or doing things they could not do previously. So I'm excited about it. I mean, I think this could boost productivity over the long term, but which jobs are most affected by it, I think it's going to be a long time, you know, before we really know that. I heard some anecdote, and I need to dig in to see if this is real, but 4 or 5 years ago, we heard that, radiologists were the ones that were going to be immediately affected by this because a computer can read a CAT scan or an X-ray scan way better than a human can and not make mistakes. Allegedly, 4 or 5 years in, demand for radiologists has gone up, not down. So, you know, who knows? If something reduces the cost of production, you might just demand more of that thing that you're producing, not less of it. And so I think there's a lot, it'll lead to a lot of change. And I think if anybody says they have confidence and they know exactly what it's going to look like, that's the person I'd be most skeptical of.
All right. Thank you so much. Thank you for, as always, a great conversation.
Thank you for having me. I really appreciate it.
Yeah, right?
That's really weird. I've got like Kashkari still on somewhere, and then that's got to be maybe it's now a repeat or something. No, it's off. It's just it's got the live stream is done. Just a note here. Trump announces a tariff truce extension. Aircraft purchases from Boeing in China. Traders predict. Look up. Take a look at. Keep an eye on Boeing.
According to the New York Times, Chinese firms have been discussing arms sales to Iran. A New York Times cites US officials on possible China.
Be careful out there. We are in a squeeze situation here with VIX 9-day. The VIX is falling off a cliff right now. If it loses its hourly trigger, we could start squeezing.
We have put out the article on the feed for those interested. New York Times further saying that it's not clear if the arms have been shipped or if a deal is likely.
Just a note that the Senate is now voting to confirm Warsh as we speak. You know, after going over that stuff, I know it's painful to go through that stuff, but you have the confirmation is happening right now. If you were able to suffer through that with me, and if you see him confirmed, you're pretty much armed with everything you need to know moving forward. So if you see like any news about Warsh, or if you see CNBC, or if you see Bloomberg or whomever come out here and they spin bullshit to you, you have what's needed to combat that. You have what's needed to say, hey man, what about this bullshit over here? Or about that? Why are you fucking spinning that to me? Because when Warsh gets or finishes up with his confirmation, you're gonna be overwhelmed with diarrhea, basically, and you don't want to get swept up in that diarrhea without being armed with the facts, the actual facts, not the fucking steak they're selling. You know, bleeds it leads, bro. And if you have that, if you have the actual information like this is what Warsh is working off of too. I was actually impressed. I forget the speaker there was the other day. which one it was, which little Fed chair, but he was pretty much in line with the same information. And like when you're like, you just want to be careful, you know, like the next few days, you're going to see like the espousing jerk off macro, like, you know what I mean? Like, oh, watch out for Warsh. And you're just like, wait a minute here. for in what context do you mean? Or if Warsh is that guy, I got my fucking thing stuck. Or if Warsh is that guy, is he actually meeting the mandate or not? You know what I mean? Like you just want to like know where we actually are, so that when you're like consuming the AstroTurf, you're just a little bit more like, yeah, back off with that bullshit over there, or man, you're right on that stuff over there, or they're making a good argument or whatever. I hope that helps you guys. I hate having to do these segments, but I gotta do them to get them out there. Like you can only stack so much of this shit high, like bullshit, before you have to like come out and say, hey, this is the actual facts. And I think it's fine to consume the bullshit, but you want to know the truth. Because oftentimes people believe the wrong stuff and then they get egg in their face. It never comes to pass, or they feel let down. You know, like things are bad right now. We're going to fix this with this. And then all of a sudden you find out that it's not going to happen. You're like, why did it not happen? And you like, I've been like pumped full of all this information and now it's not a non-thing. And then you find out that you were the product, right? Or you were the rube, or you were the person that they wanted the advertising dollars from, is the point I'm trying to make. Come up here and smash it in. Just a note here that the VIX 9-day right now is fucking poised for us to scream higher right now. You could see us make this, like, hit this shit today and tomorrow and then fade into Opex. Well, there isn't much to do. Just note right here that, let me show you the VIX really quick. I should do like a tour of what I do every day. I need to fucking do that. I've never done that. Like I need to do like what's my routine and so that you guys have it. But this is VIX 9-day. I keep this up in the background. I'll check rates. I check VIX. I check 2-year, 10-year, 30-year, 20-year. I love VIX 9-day personally. But just note here, do you see this? It says VIX 9-day right here. If this VIX 9-day loses this hourly trigger and starts cratering down here,
asked on recent gilt moves, says financial landscape.
see it right there?
Relevant for
If that fucking thing right there starts coming down, are we squeezing already? Like this thing starts breaking down right here, we're gonna go fucking vertical. Just be aware of that, okay? Are we squeezing right now? You guys gonna get back to the tape? You guys want to see it? Ooh. Oh. Oh, my nipples are hard. Oh, yeah. Oh, yeah. Oh, yeah. Oh, yeah, do it. Just imagine. Just think right now. Of the 70 to 90% of people that give their money back to the fucking market, you're not one of them. In this crash shit all week long, congratulations. They are the supply, and you're with me, not the supply. Yeah, boy. Be right back again. How'd we do marking that bottom today? We do okay? Nailed the fuck out of it. Look at that fucking VIX about to crater. VIX is about to fucking crater right now. Strap in, boys and girls. We're about to go ludicrous speed. Oh, oh. Ooh, yeah. Ooh, yeah. That's weird. I bought a thingamabobby. Thought it was. I need to look at I need to look at this here. Let's take a peek at SPX up here. What in the Huh. Why is SPX why is all this missing? Where's all my SPX gamma? Huh. Let's take a look at this together. Hang tighter, guys. Is today Wednesday?
NYMEX WTI crude junior futures settle at $1.
Oh, there we go.
$1.02 a barrel, down $1.16 or one spot.
I almost lost our gamma thing. Watch out for a flush up here.
Around $3.
We finally poked our head above. See this right here?
Gasoline June futures
Hold on here.
Voice
Turn
news
that shit off.
disconnected.
I'll give you one quick second here, guys. All right. There's a few things we need to go over here. Close that up right there. Watch out for there's a couple things going on here. There's like roll potential, but then there's like spot up or spot down or spot up, vol down. We want to take a look at this really quick here. Or there's a few things we want to take a look at here. So first thing I want to look at is I want to bring up for you. I thought I lost this. I'm so happy I didn't. It looks like shit right now. It's just uncompressed or whatever. Let's take a look at this right here. So we talked earlier this week on Monday about the greater trend, like big, larger trend. Okay, this is this white one right here. So this is larger hourly trend here, right? And we drew this out for you Monday morning, like 9 a.m. And I was like, hey, we're trying to go up here in this greater trend, right? The top is right here. That's where we are, right? But we drew in a smaller time frame trend. That's this one right here. This is gamma. And when you're working within like time frames, like 4-hour, daily, weekly, there are different trends within these trends. So as an example, if you're coming up on this one right here, right, you can trade on an hourly frame, like this, in, out, in, out, in, out kind of stuff, right? And thank you. I appreciate that. And then when you're on a smaller frame, like minute by minute or intraday, there are smaller things, right, that happen here. And that's this line, this dotted line right here. So when we plotted this for you this week, right, what did we say? We said, let me go back to a higher frame here. We said this, right? This was on Monday, I think, 9 a.m. First thing we do is what? Gamma, right? Every Monday. So we have the move up in here. We come back down, and we're now making the next move higher, right? Yeah. So we're heading up in here, and notice how this line here is higher than this one right here, right? So I've got the big line for the hour going to right here, but then I've got this smaller frame going, hey, we can do this. And we can actually do this into Friday. This could be like Wednesday. Come on here. We could hit this here on Wednesday. We can hit this here on Thursday. We can even hit this here on Friday, right? And we start running to the downside. We're looking for some kind of a move lower, right? Like a break of this trend and start trading this down, right? That's the thesis, right? That we break through this, and we can break this through this early. We can do this here. And notice how I've got this one in here. Notice how this is Friday. And there's the 7,400 right here. So you come up here, you hit this thing, and then you're like slow fading into Friday close. You're like pinning that 740. I don't know if we pin 750, but I'm giving you like the general idea of what's going to happen this week. And we've pretty much stayed in line here. Today's Wednesday. It looks pretty good, right? But we're coming into like this little back end part of this right now. And like what happens from here? I want to ask you that question. Like what happens from here? What do you think happens from here? Do we pop this up right now? VIX is showing that we can. So if we did that, we'd probably fade this down into like Thursday and Friday and eventually like pinned in and then sucked into the whole of Opex, right? That seems about right. We're getting a little long in the tooth here too, aren't we? If you look at this high right here, right? We're looking to just breach above the yellow line, come back down, get above the red line, which we just did. We hit this one. This one sent us lower, didn't it? So there's not really a lot of room left here, is there? Like hits at 750s, like top of the option chain. Now, there's some people out there that are going to say we're going to run higher here. Like we'll peek our heads above, maybe even catch some call rolling, and we can chase that too. If there's dealers up there, or if there are call sellers up here, and you're call buying 760s and 77, I don't think people are going to be buying a ton of calls up here, but you figure if people are selling your calls, the dealers will initially chase that. So you could even see like a quick rip up into this, a quick pop at least. I don't know that many people are rolling their calls right now here to like 760, 770, 780. I don't think it's going to be a mad rush of people, but you got to think that there's potential there for that. So you want to be, instead of like trying to chase that, you want to be watching close. Like you want to step off market as we get close here in case we auto reject the first time? And we're fucking close, guys. Or do we poke our heads up and then auto reject? You know, we're in that same, this is that same FOMO. And let's say you wanted this trade up here. You're really looking for like, this rejects, this gets back up here, and then you're making a series of highs. You're building poop mountain. Then you take the call. Does that make sense? It's like you're waiting. Does that make sense? If you want to trade this here, you definitely, no matter what the reaction is up here, right? Let's say in a perfect world, for a bull perfect world, it goes up, down, and then up, and then down. And you're like, hey, I want to take that trade all this shit up here. Like, this is a perfect world, right? You still want to see like the hourly trigger come up, the half an hour trigger come up, and you still want to see that triggers like do a nice little back test. You beat the high, you're underneath the hourly trigger, and you're rock and roll and you're clean. For the rest of the world, this is a very dangerous zone up here is my point. Like this can get auto rejected. This can get, up and then down. Then you can get up, and then down. So just note that in here, it's like top of the options market right now. We're getting fairly close here. And even with VIX looking pretty good right now for the bulls, you might get like a black swan, not black swan, like a whale. Like, ooh, right? And there's like a big fucking whale up here, and he's like, hey, what's going on? I'm Biggie the Whale over here. Did I just say Biggie the Whale? Like Biggie Smalls? Didn't Biggie Smalls have a song? Biggie Smalls had a song, right? What was the song? Hypnotic? Is that the name of the song? Biggie Smalls. Hypnotic? Sorry to get off a tangent here. Hold on. Hypnotize. Biggie Smalls Hypnotize. Doesn't he sing about Detroit? I think he sings about Detroit in that song. Sorry to get off such a tangent here. Hold on a second here. I swore that. Hold on here. Doesn't Biggie Smalls sing about Detroit? What are the Biggie Smalls Hypnotize lyrics? I can't say the first thing he says there. Don't think shit stink. Pink Gators, my Detroit players. Whew! He's calling out Detroiters for having on pink Gators. Did you guys know that? Yeah, Detroit players with pink Gators. Well, shit. If you're going to live in Detroit, you should have pink Gators, huh? Woo! What are those bad boys right there? What are those right there? Oh, yeah, baby. Are those pink Gators? What is that? Is that Gator? Is that real Gator right there? That looks like real Gator. Pink Gators, my Detroit players. Woo! That's a badass boot right there. Woo-wee! I should play that song right now. Let's listen to it. Hold on here. Let's see if we can listen to it real quick. Can we hear it? Let's hear the lyrics. I'm going to get in so much trouble for doing this. Ooh. Hot. Look at that. Oh, it's even got the gator on it. You see the gator right there? It's got the gators up there. Made in Italy. Ooh. What are these things? Oh, yeah. Mori, made in Italy. How much do these fuckers cost? Pink Gators, Detroit players.
Sicker than your average. Papa twist cabbage on instinct. Niggas don't think shit stink. Big gators. My Detroit players. Tim's for my hooligans in Brooklyn. Dead right. If the head right, Biggie there. Since days are under rules. Never lose. Never choose to.
Yeah, boy.
To us, wanna do us, screw us.
Pink Gators and Detroit players. I guess I got my pair of pink Gators. Should we just play that song? We should just play it, right? Why did I turn it off? We're already gonna get nicked on it for the day. Just play it in the background here. Seeing as we're at all-time highs again.
Sicker than your average. Papa twist cabbage on instinct. Niggas don't think
Let me just look those up.
Detroit players. Tim's for my hooligans in Brooklyn. Dead right. If the
More, is it M?
since days are under rules. Never
Pink Gators.
something to us. Talk go to us. Girls want to us. Wanna do us.
Oh, yeah.
Yeah, Papa and Papa.
I don't even know if you can get the ones I got. I had mine handmade for me.
M3 bang every MC easily.
They don't even show them here. They're not even for sale.
So I just speak my peace. Keep my peace. Cubans with the Jesus peace. With my peace. Asking who want it.
Maury Pink Gators. I don't even see them.
We on it.
I know these are handmade. I had these made for me, but
Your flashy ways up. Guess that's why they're broken. You're so fake. Biggie, 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 can't you see? Sometimes your words just hypnotize me. And I just love your flashy ways up. Guess that's why they're broken. You're so fake.
I raised you 200,000. Damn.
What you gonna do, man?
I'm trying to get my drink on, man.
trying to see if these are mass produced or not.
Put hoes in NY on the NY. Miami, DC, prefer.
I guess if I show up to New York, I gotta wear my pink Gators, don't I? And show up in New York.
Them niggas ride dicks. Frank White push me 6 on the 4.5. Bulletproof glass tips if I want some ass. Gone black.
Take all the stops. Take the street stops in New York.
Menage a trois, sex and expensive cars. It's still
Yeah, these are made for me specific. They're not. They don't sell them.
no for the cleaning.
I got a guy that makes me shoes. I got a guy that I can go to. You want to hear something cool? I got a guy that I go to here in Detroit. Like, Detroit's got its own style. Detroit is like cool as fuck. It's its own thing. It hasn't been gentrified. It hasn't been fucking like Detroit hasn't been fucking run over with Soto Sopa. It's the baddest fucking city in the U.S. right now. And there's a guy here, like you can go to him and you can just tell him what you want for a shoe and he'll draw it out for you and then have it made. Oh, yeah. It's awesome. Trading 743.13 right now. I don't think you can find this shoe. I know they got other pink Maury Gators, but I don't see mine in here. I'm looking at them right now. The guy said that he had them made specific. You know what, when I got those pink Gators, I got you should see what I got with them. Oh yeah, I got a Detroit style leisure suit. Is it called though? Not leisure. It's what's it called again? What's the thing they wear? It's a seersucker, a Detroit style seersucker suit I got with those sneakers. It's dope. It's dope as fuck. They use like seersucker material, and then it's like a Detroit take on it. It's kind of cool. I fucking love this city. It's so yoked up. So OG. See, let's watch this really close here. Tight here. The reason why I'm bringing this up too about where we are, or not the gator shit in the I don't know why I brought that up, but we got on a tangent here. The reason why I wanted to talk to you guys was because of where we are in market. Hold on one second here. Oh yeah. Let's see where we are. So back up in the top right-hand side, gamma. Just where we are right now, I would expect like the pop and drop up. Like park here, come back down maybe to the hourly trigger, and then back up. So just on gamma, you know, something like this, flush, and then up here and then down. Something like this. Now, I'm not going to discuss what I think happens on public, what I think happens post Opex. But I do want to warn you right now that there are some things that need to happen for a roll to happen after a post Opex. I am going to discuss it with the community, of course. I'm going to do a private stream on this and what to look for to take that trade down. You cannot, there's a couple things I want to give you a warning here, okay? If you think that it'll be easy, and maybe it is, maybe I'm wrong and it's like you just sell this and we start crashing. I know you're being told that, but I want to circle back to the show this morning. At 9:30, I did a segment where I talked about the price of the market versus trend. And if you're a fucking bear and you're fucking McGilligot and you're fucking Burry and you're fucking Pravorsky and fucking all these other guys, they're all smart, intelligent, very, very good traders. They wouldn't be where they are, right? And I can't be better than those guys. But when you have this much stretch in price from trend this high, you better get a fucking move on it. Like, you got to make some fucking moves. You got to break trend by first of the month. It's early. It's the 13th. But, you know, you got to get a fucking hustle on. You better hope that Opex and Vixpiration and some bad news can take price from here and literally send it under far enough under trend for this trade to work out. These fucking guys up here can tell you about this trade. Oh. You know, these guys can tell you about crashing and corrections and big major things, right? You know, and they're fucking popping off on here and you don't get enough by the first. And those guys will abandon that fucking trade like a bad habit, is my point. And I just showed you all of this data that doesn't agree with this big crash. So just, you know, you got to play this right. You can't just automatically go, we're going to zero. You get what I'm saying here? These guys can come out in a week or two and say, oh, sorry, we closed. You know, we took the trade, bro, but the trade is done now. You know, and it's up and to the right, and you're positioned for fucking crash. So it's not we can't do this. I'm just saying, you know, that's a big fucking ask right there. We're fucking way the fuck up here. No offense for swearing so much, but my God. Staying in trend is 10%. What do you think is going to send us down to 10% right now? I know the data is supposed to be it. I know inflation's supposed to be it. I know the consumer is supposed to be it. I know that fucking inflation is supposed to be it and that the employment situation is supposed to be it. And it ain't. So who is it? Is it Warsh? Is it Worse War? What is it? Go out there and ask him. Go find Mike Burry. Go find fucking McGilligot. Go find Pravorsky and go find fucking the rest of them, the other P guy and the Garrett guy and all the other ones. I want to know. By the first, how do you get it down 10%? Profit taken makes sense. Unwind makes sense. What do you want, 20? You want, what, 20 by the first? I mean, that's 10 to be in trend still. These fucking bulls are going to see this and be like, oh, man. You gave me a fucking dip on June 1 over here or over here? These fucking guys, they're going to be like vultures in here. This is buyers. They're going to be vultures down in here. If you're like blasting down on VIX shit and oh my God, Warsh is going to kill us all, expiration, Opex, unwind, like you need to be like down here before we get to the first. Like you need to be making some progress, baby. The mouse, dude, hit me up on a fucking send me an email, mouse. Send me an email on send it to WSB. Do my personal, bro. WSB GAWD Wall Street Bet God at gmail.com. Some of you guys know who that guy is. Send me an email, bro. Just hit me up. Be like, dude, it's the mouse. What's up? Make sure you use like a drop email. Don't be using like the fucking Pussy Slayer 69420 email address either. I know. What is it? Tell me. Like, what the fuck is it? I want to fucking know. I know everything when it comes to this shit. So I want to know by those guys. I mean, they wrote a fucking, like, let me show you what they wrote. Let me show you what they wrote. I want to show you guys something. Hold on, I'm going to show you guys. I mean, these fucking guys, they wrote the fucking Bear Manifesto. I'll show it to you. Let me show you the Bear Manifesto. It was pretty gnarly. I mean, they had it all. They're probably burying it right now. Hold on here. I mean, I realize we're in spot up, vol up and shit. I realize that when it all comes crashing down, I get it. I know how it runs. But I got that big question, like, you better, like, is it just because of spot up, vol up? I mean, you're talking, what, a 20% fucking drawdown is vicious. Coming into the strongest time of the year. I don't know. In one of the biggest down moves of a down seasonality. We dropped 10 to 12% already for the seasonal low. Here, let me show you what these guys wrote. I mean, it was kind of hilarious to read. This has never occurred off a new high. Today's unprecedented momentum reversal heralds start of 20% slide. Oh my God. God. Oh, I want to throw out my mouth reading this shit. Every weekend, every Monday. Cracks are starting to appear. Exposed to wobbles. Pascario. That's the other one. I mean, they got all the charts up. They sound so smart. Yeah, we're up here. I'm not going to I was going to show it to you, the manifesto. I had it earlier. The best one I had, I can't find it. That's the one I want to show you. It was gnarly. They broke out like every fucking data point, and they had like, it was like a long fucking thing. AI call frenzy will be a double-edged sword for stocks. Okay, so don't chase it up and hope it just comes down. Let's take a look at Gamma on the day. Let's check out the website, boys. Paid membership. Continue to preview. Am I not logged into this shit? God damn it. Hold on here. Fuck me. They kicked me out. Fucking Bork doesn't like me. Hold on here. Hold on here. I got like 18 different ways to log in here because I can't trust can't just have some uniform fucking security. It's got to be. This isn't on us. On the whole thing. The whole world on security is all fucked up. All right, hold on here. Put this back up here. Yeah, definitely don't want. We pay. You know how much money we pay for this? Like, we pay like serious money for this data. Like thousands of dollars for this shit. Thousands. Like, this is instant real-time data. It's fucking buku bucks. Let's check out Zero Date here. And we're building cool shit with this data. We have so much shit we don't even use right now, like just the data we're paying for. What do we got here? 7450. Woo! Woo! What about this one for tomorrow? This is all real time, by the way. Whoa! 7,500. Woo! My nipples are getting hard now, boys. Oh, yeah, we got everything. All that shit that I was promising, I fucking took me years to get good developers. I got the fucking best goddamn fucking finance developer in the world. He's the best. This fucking guy is building some dope shit for us right now. It is dope as fuck. He's got like Opex gamma. He's got like all kinds of shit coming out. He's got like divergent gamma. So you get like your top 10 fucking stocks you guys trade, like your favorite memes, and then you can do spot versus gamma, and then see the divergence for like what needs to catch back up. It's so fucking cool. It's not just this either. We got a bunch of other shit up here, but we got a bunch of cool shit like how to build trades, you name it. Anyways, tomorrow 7,500. Woo wee. Are we looking for a fucking gap and crap tomorrow? Like gap it from 7,450 to 7,500, or we just front run this shit? And then we're going to look next at 2-date gamma. Don't worry, I got you guys covered. If you're a free member, don't worry, I got you covered today. We got 7,500 again on Thursday. And then what's this button right here? What's that button? What does that say? Opex gamma. Ooh, we're coming into Opex. Spicy. Should I click it and see what the target is for Friday? Anybody want to see it? Anybody want to see the Opex net gamma right now? Let's take a look at it. Ooh, what's that? Oh, shit. Shit. Woo. 7,500 on Friday, too. Well, I don't know. I mean, can we lose where we are right now? Ooh la la, baby. Whoa. All right. Where are we at right now? Hey, we're at 7,500. We're in the neighborhood. 7,450. And we still got the target on 7,500. Imagine if we pin this on Friday. And you got the big playboys out there saying, we're going down. All of a sudden, you trigger call rolling up here next week. Maybe that doesn't quite happen exactly then. You got Vixpiration here on Tuesday and Wednesday. What would it be like if it was like this? Like rip up here, then rip up there. Bam, bam, bam. Your VIX is now down at $12 or something. And then you get the unclench. Maybe you don't even get the unclench. I mean, 7,50 is going to send VIX to the shithole, isn't it? And Vixpiration is here on Tuesday, right? 19th. So just imagine you're up in here and you're like, oh, I'm going to sell Opex on a pin on 750. And then you come in on Monday and you get what? What happens on Sunday and Mondays if you end the week on a high? Anyone? I've said it to you a million times. Break out your test sheets right now. What do I say to you if you close on a Thursday and a Friday and a high? Well, we're going to go up there and put the new high in on Monday. Right? Follow through. Weekend effect, right? Oh, my God, we're up in the 50s now, and the rolling call's higher. Wham, wham, wham. There goes your VIX unclench, but it's on a higher high up here. Hold on a second. I don't need this anymore. They already hate me right now. Here, take this too. I spent the morning describing pencils to people that probably know this better than I do. It wasn't for their consumption. It was for people that don't know this stuff. Trying to simply explain pencils and dollars and stuff and Warsh. And so we might there could be, just a little bit more, right? A little bit more into Tuesday. You might not get an Opex unclench. You might have to wait for expiration for the unclench, is my point that I'm making to you here. Now let's go down to the bottom right-hand side. It's the end of the day right now. We're trading sideways. We're not really doing shit right now. Let's take a look at the day on this. Let's see where we're at here. Now, if you recall, if you were here this morning, what did I say to you? I said to you we could do this early or late. I said I'm going to draw this. Let me get rid of that. Get rid of this. I need a hotkey. Delete all vertical lines. So what do we got here? This morning I drew this in. You can actually go back and watch the broadcast. Not like I fucking say something and fucking disappear or something like that. So we drew this in this morning. And I said to you, we're going to come right here, right? And we struck that fucking tick, didn't we, like a bad habit? I said, we might come back down for this one over here later in the day and then do this, right? Potential for that. If you're more conservative than I am, you can wait to buy this. You might get left behind. And then I drew this right here. And I said to you this morning, what? I said, I'm going to draw this target over here because this is Friday close. But we could put this stuff in now, can't we? We could trade down here and then hit that up there, right? There's all kinds of range of outcomes of how we get here, right? And where is this target? 748.50. This is the 500 pin on Friday and Thursday, isn't it? So we're already doing this early right here. We're already up here. We're kind of at the top, aren't we? Might get a little bit more action up here, but then a little bit of this nonsense. And then up into Friday, that's 748.50. So you just want to be careful, not so much careful, but where do we buy a dip on this? Like, how do we trade this? What do we do? Do you guys know? I don't know. You tell me. Like, how much more room do we have here? Well, I would posit that you have maybe this one right here. And then we flush down here, right? A little bit of a corrective move. And by that point, you've got the hourly trigger coming up and the half an hour trigger. And lo and behold, where are we? All right, back up in here, right? This makes sense? That look right to you? Something like that, right? Let's see what happened over here. Yeah, ping, pang, boom. Ooh, that's what the Bears want, right? But this one was pretty good. This one was pretty good. What did I tell you about this yesterday? I talked to you about rules, right? And I said, hey, I said, you're not going to hit that first target. We didn't, did we? They sucked you right back down, didn't they? And I said, don't worry, we're going to hit it in the second one. So we come down here with the second one, right? We did that one this morning, right? This was 1, this was 2. And what did I say to you when we finally broke through this one? I said, we're going to do this in the second one. I said, if we get a successful back test in this back test over here, what's the result? I said, this is the one that fucking prints for you, right? This is the guaranteed. So we got the guaranteed. This is the 1, right? 1, 2, 3, And then you get 4 and then 5. Now 4 and 5 are the worst of all of these moves. This is your best move, right? As well, the money is right here. Money. All of this to get to the point, and look at how high you are. You're not that high, are you? Like all this work, and then you get the go, and we go. So, from here on out for an outlook into tomorrow, we're going to draw it just like this. I'm going to try to like fix this up a little bit over here. I don't like that at all. Make that a line. We're going to make that 1. How do we do down here today? That's a pretty good goddamn day. Let's go back to a 1 minute really quick. Let's just check this out. Oh, yeah. Oh, yeah. Look at all these little lines up here. Go, 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 go. Go, go, and go, right? We're trying to get this last little bit right here, right? I have so many bad calls that I love making these good calls, so I'm going to stroke myself for 1 second. There you go, buddy. People have a hard time trading when you're just doing like squeezing up. It's okay. You're here. It's good. I'm just fucking with you, Jimmy Craven. I should pump myself up more, don't I? should do like little clips and shit. And like put them on fucking TikTok. I need followers. I don't need no fucking followers. I don't want any fucking followers. I like you guys. Okay, here we go. Hey, I love you too. No fucking followers. We're about fucking. We're not fucking selling service around here. This is a goddamn community. It's what we fucking started this thing. It's fucking tired of goddamn Farus. All right, so we got this right here. We got to hold this right here. I'll draw this in and then we'll get rid of it here. Up here, this is tomorrow. Let's just do this 9 a.m. right there. 1, 2, and 3. Give it some time, and then back up here. That's what I think happens. Something like this, okay? Now, the one thing I want to say about this is not required. It's not. It's like this is all FOMO right here. You want to be looking for this corrective move here. So you want to like, for the next entry, you're looking for this to happen, okay? Somewhere down in here, okay? Just like that. Okay? Now we're going to delete all this. You'd think that I would keep this, and you'd think that I would like try to suck myself off and, you know, that kind of shit. I'm the fucking best. You don't need to fucking brag about anything. You just fucking use you being the best, whatever it is you are, and you fucking trade and make money that way. That's what you do. Hold on 1 second here. Get rid of all that bullshit. We don't need that shit. I'll tell you something. You're only as good as your next trade. Don't fucking ever like sit on your laurels and like suck yourself off. There's no goddamn point. We got to put this in right here, okay? We'll start somewhere else. You're going to be wrong eventually, so. Oh my God, look at that stupid shit right there. Look at that beautiful thing. So, if you speak to the boys, this is spot up, vol up. We have experienced these in the past. Do you remember when we've experienced these? We experienced one of these back, I think, in the summer of... Let's look at the last time we looked at one of these. I want to say in 23. Nope, this one right here. This is a pretty big one right here. This is October, November, December. There's another one. This one right here. This is the one that I'm talking about. See this one right here? 2019. Nope, that's the wrong one. Hold on. Which one am I looking for here? It's this one right here. Is it this one? It's this one right here. This is the one. This was a spot up, vol up situation. If you remember it, you remember it. If you don't, I do. When we did this spot up, vol up, I think it was this one right here. This was May into June. And look at this, May 24th. Or excuse me, July 24th. We kept going straight up, straight up, straight up, straight up, straight up. And then we did not unclench until July. Let's look at this one right here. This is comparable, right? We just went up. November, December, big down. But guess what we didn't give up? We didn't give up this half an hour trigger. We're really close to this hourly trigger. Right, let's look at this one right there. This one right here was seasonal weakness. This was tariff doom. We have this one right here, big one right here. And now you've got these guys saying, hey, this we have to give this back. That's what they're saying. We got to give this back, bro. And a lot of these guys are saying 20%. That's what these guys want right here. They want 20. So that's why I'm kind of questioning, like, really? 20? How about 10? How about, that's 18 right there. I said 20. That's more than 20. This is 20 right here. That's what they want. They want like this. They want this. Maybe. I still think it's a reach. I think if you were to have this out here in like November, I'd be more, it could be a tightening cycle, inflation raging. And even then, if you're up here at like the 60s or even 800s, your 20 is now moved up. And now you're back testing this low right here. And there is your monthly right here. So you actually continue the melt up into June and July. We roll down and you get the wash and oh my God, we're going to cut. You've got the double. And if we're able to, oh my God, blow it all off and we're out of here and at the end of the year, pretty good, right? This is worst case scenario. If it's really bad, oh my God, inflation's raging, Fed aren't doing the thing. There's your cup and handle for the end of the year and you're doomed. We're back up and sideways, put this thing in March, and then down. But I guess just thinking about this here, are we done? Is this spot up done? And then the bigger question is, looking back at prior spot up vol ups, we didn't actually give up more than the weekly. There's one here in 2018. This is Trump president. This is September. This makes more sense to me. This would be repeat of Trump 1.0. That makes a little bit more sense. But this is later in the year, isn't it? And we recovered, didn't we? And we didn't actually put the top in until the following year. Let's go back here. Look at this. And just on a weekly basis here, look what we're putting in right now. One right there. One right there. And one right here. That's a fuck ton of buyers down here. That's a lot of demand. That's 12%. I think if you're those guys, I think that that's a pretty fair, like, I don't know about that 20 and 30. Let's look at the month really quick. Whew. Even if we were to come back and test the lows in late, if we're going to test the lows of the prior month, let me show you a few things here. So here's the monthly, right? But let me show you something here. This is the actual month check back right here. So this here is the month of April. This is the month of May. Even if you wanted to close the month of May flat, which is the historical average. We start May strong, we finish May weak. Okay? So even if you were to come back down here and just up here, let's say hit 50, and then you come back down here for a slightly negative month, but then recover, you know, you're like recovering slightly negative on the first, but you're closing the month slightly red, right? I'm going to show it to you here. I'll show it to you. I'll prove it to you. Not prove it, but I'll show you what the seasonal averages are. Here it is right here. Month of May return minus 0.11%. So what this implies is that you start the month strong and then you end it weak, but not red. And you're trying to find the month of May low to get long as fuck for June and July. These are, what, 2 of the strongest fucking returning months on average. You're fighting the probability by saying we're going to crash. Well, we're in spot up, vol up, bro. You know, so if you're a bear out here, I think reasonably you could expect maybe this right here. I mean, you're going to find buyers. You're going to find buyers. This is a huge demarcation place right here at 691 and 700. You know, like even if you get that, it's not near what they're promising you. I would like to know what it would take for us to go down. It would have to be something fucking material. Like, I don't know. You know, I'm not trying to say this can't happen. I'm saying to you that we spent this morning doing what? Going over the things that can matter. Like, how do you get that? So you need a trigger. And we're not going to ever trade like World War III or Strait of Hormuz gets worse. We lose ships and stuff. You can't trade that. So what do you trade? It's got to be econ news. It's got to be technicals. It's got to be something. So we know the economy is good. We know the consumer is good. What did I say to you earlier is not. The government, the bond market, corporations, right? Those are the guys that are out on a limb right now, right? So if that's the case, you want to be paying attention to what on the roll for the end of the month? You want to be paying attention to Warsh. You want to be paying attention to the bond market. And you more than likely want to be paying attention to any other existential unknown risk to the market. I wouldn't necessarily be looking towards the technicals or the fundamentals. We can just go vertical. So if you're looking for like a blow off or something like that a spike in volatility to get long off of, you're looking for the gamma never being this high before in recorded history, which is fucking fake too. I saw that shit. That's just because we don't have records back in the 1990s. We only have very recent records on gamma. They don't tell you that. So when they go, oh, historically, I've never seen this before, that's because they don't have fucking records for it. So for us to get down here, you want to be paying attention to what? To bond markets and Warsh and what I told you this morning. Like we should not come down. And if we do come down, you need like ultra fucking hawk Warsh. I mean like ultra. And that is not their mandate, is it? And we know that Warsh wants to run it hot. So I think that like even if we get this unclench in here, just like drag in your expectations. And if we go down here, great, you get paid. So like you should be in the profit. You should be in profit here, cha-ching, and you should have the ability to have unlimited profit if needed, and to be able to close them out and make money if needed. So have optionality in whatever this role is if we get it. Does that make sense? optionality to take the money and run. So if you hear like one of these big bears say, hey, we closed them, you can close them with them and be in the money. Like, you're not printing down here, you're printing here. And then you have the ability to gain more money if it continues on. Do you guys know what trades those are? Anybody out there know what those trades look like? A ratio spread would do it, right? I think a ratio would do it. Some kind of a back, maybe even a back. I don't know. Put ratio back spread maybe, but I'm not sure. Like a put ratio spread would do it. With that, or some kind of ratio spread. If you did like a ratio spread, what it would say is that you're only going up so much, and then you make money coming down here, and it's unlimited if you continue to crash down. But you're in the money here is the point. Make sense? Let's get rid of this here for a minute. Let's go to a daily here. No, let's go to a weekly. We already did the weekly. Let's go look at this. So you just shouldn't be focusing on this, should you? You should be focusing on Poop Mountain, which is where the daily trigger is. And I think if you make this smaller, you're just, instead of looking at all that stuff and all like the doom and gloom and all that stuff, you focus on what's in front of you. And you look at the prior month. So if we're looking at April, right? Here's April 30th. Over here. Check it out. This is April 30th. This would be the seasonal expectation for the end of May. Okay? Now we come back, check the prior month, and we're slightly red into the first. You've got 750 up here. And I got some better news for you. I'm going to read you some cool shit. Something that goes against that big down trade. So you got this right here, right? Coming into Opex, right? You're partying up here. Sell a bunch of calls, sell a bunch of calls. Maybe you get a pop up right here. Maybe, maybe not. Maybe it just abjectly fails. No one wants to buy calls. That's possible too. Coming down here, and you're looking to continue higher. And if they can't get us down farther than this, and we start getting that daily trigger over there, and you're not breaking trend, you know what they're going to do in the first, right? They're going to buy the fuck out of that. We got looking ahead to the two biggest return months of the year. Two of the, four. These are the monthly candles. You're parking in here, you're back testing this, and we got to fill this fucking thing right here. You're going to be out of your fucking minds if you think. You're going to be out of your fucking mind if you think you come into this, the two strongest months of the year, and you have not broken fucking trend, and the weekly trigger is coming up, and these fucking buyers are here. I don't know, man. You got to really turn up fear. The sentiment has to be, oh, hell no, we're in big, baddies coming. So let's look at this real quick. Let's count these really quick here. We got 1, beat that high right there. 2, right? 3, 4, and 5. Woo! And this one right here can be considered 2, right? This 2 right here is not the same length as this one, is it? Normally what happens on that length? It's up here, isn't it? Like if I measured that right there, this should be like 1.5 times that length. It's like way up here. This is the most bearish. If you just did this 1, 2, 3, and then it was just a corrective to go down, this length should be about that long. If it's more bullish, if it's more bullish, then you could say this is 1, right? Could actually say this is one right here, couldn't you? This, you could say that's not a pullback there. That wasn't a corrective move. We didn't trade sideways long enough, Cap. So this now becomes your 1. And then you don't give that up. That's 2. This could stop right here or here. This is all valid in here. That's 2. There's your 3. There's 780. You're going to fail that fucking thing, right? Maybe it's higher. You're going to have the same length as this one into June and July. About that right there. And then you can't guarantee the fall 4th and 5th wave. It's pretty fucking extremely bullish, isn't it? I can't even count 5 in here. I can't count 5 in here. There's prior high right here. I don't see anything here. So that's 1. 1, 2, 3, 4, 5. Is that what you're trying to say it is? Still not right. 1, 2, 3, 4, 5. This is kind of weak looking. I've never seen this. It's very rare that you'd see something like that. This doesn't measure this, and that doesn't measure that. So it's either 1, 2, 3, and then we're going to crash, or it's 1, 2, 3, 4, 5, even higher. I'm going to bet that the eraser gang is going to pull out a bunch of erasers here moving forward. That over there. We're going to worry about this daily right here and only that daily. We'll make this even easier for you. And we're going to focus on just what's right here. They bought that dip, pushed it up, back tested it, held it. That's all good. I like seeing that. And this is fascinating too. If you watch this, just this right here. See these like little white, see these little white things right here? You want to remember that one right there. And why do you want to remember that? We're working on Opex, right? We got Opex right here. We got Vixpiration right here. Vixie. Opex. Potential unclenches for down. So if you wanted to short this, and you wanted the big crash, and you wanted the big corrective move, you wanted the end of May to be bloody and then recover and all that kind of stuff, I want you to watch this in particular. You see this right here. See that hourly trigger right there coming up? So you're kind of looking for two things. You're looking for price to break below the hourly trigger with a new low, or you're waiting for the drop up here. And then you really want to see this one right here. Wham. Your hourly trigger comes over. And then this one right here. And if you see the failure in here coming into like the beginning of the month, you can sell that straight down to the depths of hell. Okay? But until then, you're trading this right here. Until we give this poop island up, until we lose shit island, This is all you should be trading right now. You can even wait to sell this until you get up here. 50s, 52 and a half, 56, 60, any of that kind of stuff. Let's take a look at this. On a 1 hour basis right here. So this is where we are here. This is Opex. Turn that down. Jesus Christ. This is worst case scenario right here. You see the half an hour trigger coming up right there, but just this one right here. And I don't think we need to go any higher. You could theoretically do it like this. There's your 4 hour right here. This is Wednesday. Today it's 1700. I don't see that. We do Thursday at 10 a.m. We know about this one down here. This will turn into a 4 hour right here. Not a 4 hour right now, but it's going to be. And this is you, Johnny, on the spot over here to pick this up, right? We're going to make this one dotted. We're going to make both of these dotted because I don't think there's much more here. And you might need VIXI to get this done. You could say that one right there is still like a valid out here, or it's something where you're popping up here. Like we do the sneaky up the pole thing on Opex. And you're like up here, and then you're losing it right there. Let's do it like this. $752.5. Right there. Come back down here, grab this stuff from up here, Opex 48, push up on a roll onto Monday, wake up on Monday morning, there's your up move on Monday. And then we're like bombing down on Tuesday. Where's VIXI? This is Tuesday, 8 a.m. So unclench up here on Tuesday, and all of a sudden we're breaking back down. Some just like that. I can't say this is going to happen. This unclench. If this thing snaps in here, we're going to get fucked in here. We come in here for like Opex, and then it's like wham, wham, bam, wham. Sorry, you're not getting the Vixpiration. Come back up here, then you get the Vixie. Just note that in here, it gets very dangerous in here. Okay? Let's look on a weekly basis. Oh, look at that. It's almost a near perfect target up there. Check that out. R4. And this is actually auto sell right here. And check this out too. Look at this R3 right there. So we'll lower this a little bit. Right there. Here's R3. Right down here. Hit this one. We're on R2 right now. Park it on R1. This all looks about right. Look at this. We'll do this together. So we're coming up into R2 up here. We backtest R1. Right? We've already broken above, so this door is already open. We come up here. We reject the R3. Right, come back down, and then we're breaking up here, and it's an auto sell up there. It looks about right now. Let's put this here. Yeah, I'm going to sell the fuck out of it too, Mouse. I think we all are. I think we're all going to sell the fuck out of that, aren't we? I just don't know if the sell is right here, if it's over here. It's either going to be right here. It's either going to be some kind of like sneak that shit up the wall and sell the fuck out of it, or it's going to be like slam and then this bullshit over here and then down. Something like that. We're getting pretty fucking close, aren't we? We're within hand grenade. You could theoretically like start selling this now and be close-ish. That's about where we are right now, gang. You want to snip that for yourself at home? You can. About where we are. There are some notes I want to make to you here. There are some notes that I want to make to you here. I want you to impress upon you that we must hold 735. If you see anything like we're back testing down here, they blast us down here, and then all of a sudden you see a new fucking low and we're not beating the fucking high in here. You know, like this is the down move. We're not beating that high. We're like stalling, and then we're putting in new lows. We're done. Now, this is a plan. So we have a fucking plan, right? I'm not a furu. You should fucking, you can consume furu, but don't drink too much of it. This is what a trader uses. So this is your plan. And you now know like how to trade it. Hey, I'm looking to buy a dip over here to get up here. Oh my God, we went through it. I have rules. Oh my God, we got a new low. I didn't get burned to pieces. Oh my God, we're working down. The furu was right. Cap was wrong. My plan was wrong. But you have a plan. Does it make sense? Like you can't lose money with a plan. If you know the ins and outs of your plan failing or your plan being successful. Does it make sense? So forget the furus. Trade what's in front of you and know where you lose support. Know if at any point we have a back test and it fails or anything like that. We know where the targets are, and we know where the potential unclenches are for negativity. And we also know some other things too, right? Like we come back into this here, we're selling the fuck out of it. If this thing gets parked and it starts stalling I'll tell you where I think it's going. You want to know where I think it's going? I'll tell you. I'll show you right now. Here's another freebie. This is what I think happens. Right here. That's what I think happens. You take half of that right there. You could potentially, this could potentially go somewhat deeper, but I don't think so. Something just like that. Something just like that. And I would even gander that we slap the fuck out of that one up there potentially. We roll these fucking calls higher up here. I think we fail just underneath. Potentially. Come down here. And there ain't going to be no fucking way. And this one right here for July. See this poop right here? Right there. These guys are going to step right in right here. Think. You maintain Poop Island. All these guys are still clear right here. You see these guys right here? Those fucking guys right there. You see them? Right there. And you're going to hit 70. Right there. This is much farther out in time. This is July, middle of July. Target 770, and you're going to be buying that off of 700. You can buy 700. 700 points by middle of July. 700. Oh, yeah. 770. This is the best you can hope for right here. 700. I would even posit that. Where's April? You might not even get down there. Right there. Up, slow fade, and then back up. So if you are rolling calls up here, if you're a call seller, what are you selling up here? You sell 60s and 70s, and you sell them for early July. July 1. And they should be worthless, and then we can unwind and do the 60 and 70 Opex of July. Make sense? If you're an option seller, here's your plan. I am not a fan if you're an option seller. If you're an option seller or a spread buyer, something like that, I am not a fucking fan of. So if you're a call seller, you got your call selling. If you're an option opener here for rolling down in here and you're trying to have both sides, I don't think that, I personally don't care if we go down here and, you know, give all that shit up. I think it gets sucked right back up. And we're back up in here. So like sell these calls, sell those calls, puts down here. If you see us down here, start selling puts. Like you get your call side sells. You get your fucking condor up for the summertime. You're selling these and you're selling puts down here. Believe me, this is all an operation. This like crash shit is all like an operation to sell you fucking puts to suckers and build out a fucking condor for the summertime. Make sense? And then you don't break out from this into the 60 and 70 until middle of July. So your Condor LVR, if you're out there, this is your plan. Make sense? Like even if you're down here, they're going to be selling you puts down here. Up here, they're going to be selling you puts up here. The only thing I would say on this would be, if I had anything to say on this, if you're a call seller, be extremely careful in this right here. See this last little bit right here? Be extremely careful. Like they run this up into like Friday, or they run this up into Tuesday. Like you get like run straight up into the Opex. And like, so if you're selling calls, make sure like, or what I want to tell you is, I don't think it's out of the range of possibility that when they're selling those fucking calls that we front run like to like, I mean, it's a small chance, like 35% chance, but like running this up quickly to sell calls and dealers chasing to like 658 by Tuesday or something. I don't think that's irrational to think. Like for the briefest moment here on Opex and here or up in here, like just be aware of this, especially like if you're going to sell this Opex at 50, just be aware that this could be like a ram up here briefly. And you're not selling 50s, you're selling 60s and 70s, okay? 60s and 70s you're selling. So if they ramp up the juice on these, like we're like cranking like right fucking there, and now these are all getting some fucking vig and some premium. Everybody's intoxicated, and then it's slammed down to the downside. Okay? You want to look at that again? Top's right here, but I got it at 52.5. That's all that's needed. But, you know, like if you get the quick rip here or the quick rip here for like, you know, like Rampo-Rama call rolling, I don't think a smart call seller is selling 50s. I think they're selling 60s and 70s. So just be aware of that up there. Okay? Let's go back and look on a 1 hour or 1 minute. I want to read you one last thing to hammer this home. There's a 4 right there. There's a 4 right here. This is 10 a.m. And I want to read you one last thing before we leave, okay? I'm going to read you one last thing here. You know what I used to hate? I always fucking hated people that made videos at nighttime. I mean, I love them, but it's always like after. And then what they do is they give you they never fucking stick their necks out for being wrong. They never say like, this is what I think happens. They're always like I'll tell you the different things that can happen, but I tell you what I think is going to happen. I think this is happening. Now, these are the other outcomes. You have a plan now, right? You have the full, complete package. But this is something that's after the fact I'm reading to you. But it does set up the future. So we'll read this to you right now. NASDAQ spot vol correlation now positive. As of today. Not negative, positive as of today. In longest streak on record. Let me break out my crystal ball again and see what this means. Another day, another discussion of the crazy technicals that are lifting this market to crash up every single day. Even more and more stocks get left behind. The S&P is on pace to close at another record high. I wish I knew this yesterday. Yet a whopping 344 S&P names are down, leading to a negative breadth print of negative 174. I love the goddamn S&P 500. Yet a whopping 344 S&P names are down, leading to a negative breadth print of 174, which means today could result in the most negative breadth all-time on record. That's the real words. You know what that guy didn't tell you? On record for recorded gamma. That shit only goes back to like 2012 or some shit. Oh, yeah, it doesn't go back that far. They didn't keep records for that shit. Which means that today could result in the most negative breadth all-time high on record. That's false. I bet if you looked back in the 90s, you'll find that that data matches this data. Yet while the rest of the market and economy suffers, the economy is suffering. Listen to this and what I just showed you this morning. While the rest of the market and the economy suffers, the retail ETF XRT is down 6.7% over the last 3 days. The worst such performance since the Liberation Day lows last April, while home builders and restaurants are teasing multi-year lows. How would you read that? Well, fuck, let me get long on them. Let me rotate out of something and rotate into it, baby. The NASDAQ continues its call-driven levitation at an accelerating pace. I think somebody was telling you we were going to enter a bubble when no one else was. I think someone told you about how we're in the bubble and nobody else was. I think I told you that we're heading into the top of the bubble. It's not done yet. And remember, we're about to roll here. So you're going to roll into like a bunch of craziness, right? And you're going to be wanting to believe these guys when they tell you this shit. Oh, it's really bad. Bubbles burst again. Consider this. The NASDAQ spot vol. Remember, who are the big boy gamma boys out there? It ain't me. They're the smartest fucking guys in the room, these guys. Consider this. The NASDAQ spot call correlation has been positive for 7 straight sessions. Now the longest streak on record. It is this unprecedented VIX lifting call buying frenzy, spot up, vol up that has made markets crashed higher over the past month, damn it. According to Goldman's Brian Garrett, this has been most observable in the tech sector. The NASDAQ spot versus NASDAQ call implied vol correlation has flipped positive for only the first time in the last decade, as literally everyone piles into NASDAQ calls. I guess we're kind of guilty on that, huh? Sounds like they're a little angry about it. How dare they? It's my market, damn it. It's not retail's. I bet we're the ones buying calls. Right? I bet there's a fucking pro or two watching this show right now. Got us on in the. If you're a pro watching us in a in a boiler room, say hello. We used to have those guys watch the show. I don't know if they watch it anymore, but according to Goldman's Brian Garrett, this has been most observable in the tech sector. The NASDAQ spot versus NASDAQ call implied vol correlation has flipped positive for only the fourth time in the last decade, as literally everyone piles into NASDAQ calls. Yet pouring cold water on the bear case, Goldman derivatives guru Brian Garrett writes that while many participants have suggested this is the fuel for an unwind, but the data does not corroborate. Well, fucking A, Brian Garrett. Thank you. If you're out there, Brian, thank you very fucking much. I just explained this all day long to our people. This just came out, by the way. That's because, as the Goldman trader notes, short-term noise, average return minus 60 BPS has led to medium-term strength. And the average NASDAQ return over the next month is 270 BPS. Almost 2 times the unconditional 1-month return over the same time horizon at greater or less than 150 BPS. And Garrett, at this point that I've read, has not even fucking told you about the returns on July. You don't even want to see those, bros. In short, this bubble can last longer, can last even longer than most rational traders remain solvent. Most rational traders remain solvent. You know, we're in the middle of fucking inflation rip. You got to chase. You know what most rational traders are? They're packing it the fuck up and they're fucking scared. And they got no risk. And they get left behind. And they're the supply. And they'll be the fucking supply at the top. And they'll be risk adverse. And then when it comes time for Titan, they're going to get taken to the woodshed again. You are the supply. While they tell you it's going to crash, they're fucking long. So stick around, stick with me. We'll run fucking circles around these pros and what they fucking spew to your ass out there in public all day long. Remember, these guys wear fucking pants. They might be the smartest fucking guy in school. But that don't mean they're a better player, right? What's up, Jimmy Craven? Mouse trying to get on the boat? Send me a fucking email. I'll pick you up. I'll bring you on board. Hell yeah, Mouse. Cheese, baby. I got the cheddar for you. All right, so NASDAQ spot vol correlation is now positive. Do you know what happens when that happens? I'm going to give you the last little juice here. You want the present? I got the sexy for you. Ready for it? Whew. Where is it? Can I show it? Bammo. Advancers, decliners. Look at that bad boy down there. Doom. Market, brr. Not doing this, is it? They're wrong again. What? No. Hold on here. Shit. Hold on, boys. Can't seem to get this thing to fucking get smaller. Look at that bad boy right there. Woo-wee. NASDAQ spot since NASDAQ, NDX spot versus NASDAQ 1 month, 25-day call, realized correlation. Woo! Beautiful thing right there. Hold on. We ain't done yet. Why do you want to look at that right there? I'm going to show you why. Last time we were up here was when? Beginning of 2017. So go back and look at the returns on 2017, the last time we were up here. They were good, I'll just tell you right now. Here's another one. Look at that. Bammo. Look at this one right here. Just looking to go higher, isn't it? Look at this one right here. Woo. Haven't seen shit yet, have we? What this is telling you is expect more up. I think you're going to be getting letters in the next week or two saying, hey, we closed our shorts. I think when you look down here later on, you're like, hey, what's this going to do over here? And yeah, I guess I can't show that. You build the house of pain up here, you come back down here, and these returns should continue. I'll see you all tomorrow, 9 a.m.